Welcome, everyone. The hard money train's about to leave the station. But first of all, I just want to thank you guys for going on this journey with us. Now, over the next 4 hours, you're going to hear from some of the smartest minds on Wall Street, corporate America, and social media. They're going to talk about why hard money absolutely should be in a diversified portfolio and where prices may go: gold, silver, Bitcoin. I hope you're ready. Buckle up. Hard money starts now. Hard money, we're here, baby.
Boom! Hey,
welcome.
This is the biggest hard money conference, gold, silver, Bitcoin. Because not everyone wants to put it under 110, but we do because that's the way to do it, guys. The last hard money that we did was end of November. It was a perfect setup. We have many of the same superstar guests to join us. Scott, are you going to take everyone through the lineup today?
Oh, yeah. All right. So we're starting off with Warren Pye's 314 Research. He's been calling it every which way. Next, we got Bob Elliot of Unlimited Funds. Then we have some of the corporates coming in, some of the gold, silver experts. Shane Williams, CEO of West Red Lake Gold. Shawn Khunkhun, he's CEO of Dolly, Varden Silver. Next, we're going back to the analysts, the investors. Adam Rozencwajg, GNR. If you're on Twitter, if you're on social media, you've seen some of their work. Then we have Paul Sarjeant. He's COO of Kobo Resources, another gold explorer. Singh, CEO of First Nordic Metals. James Tworek, he's CEO of Element 79 Gold. Then we go to Twitter's favorite lady, Tracy Shuchart, Hilltower Resource Advisors. Then we have Dan Weiskopf. He's portfolio manager of Amplify ETFs. Jeroen Blokland, he's founder of the Blokland Fund. And then lastly, we got Fred Kreuger of Math Money Bitcoin. He's the guy you need to go to for everything Bitcoin. So we're excited for this lineup.
Man, we got a huge audience on Twitter. You can follow us on YouTube, and we still send it to LinkedIn. There's people there. There's people
apparently
all buttoned up on LinkedIn. All right, Scott, we should kick it off.
Oh, we got to do.
Let's do the sponsors. Run through the sponsors.
Yeah, we got to do sponsors to make this all possible. We'll run through quick. So we got West Red Lake Gold Mines. They're building the next billion-dollar gold producer. And then Dolly Varden Silver is one of the fastest growing mineral exploration companies in your leverage play on silver. And then we got Amplify ETFs. They're your one-stop ETF marketplace. Next is 314 Research. They're the next generation of investment research. See how they can improve your investment process at 314research.com. And then we have Unlimited Funds. They're offering hedge fund-like exposure at a fraction of the cost. Hilltower Resource Advisors, expert insights on commodity markets. Visit hilltowerresourceadvisors.com to check out Tracy's work. Next, we have Goehring and Rozencwajg, natural resource investors. They put out some of the most well-researched commodity forecasts in the industry. You can find them at gorozen.com. And lastly, we got Blokland Smart Multi-Asset Fund. It's a one-of-a-kind fund invested in scarce assets. That's high-quality stocks, gold, and Bitcoin. You can find out more details, bloklandfund.com.
All right. Without further ado, we got our lead and one of our favorites, Warren Pye's 314 Research.
Bring him on. Warren,
how's it going, man?
Man, it's great to be back with y'all. Love the energy. Love being here. And thank you for having me, and thank you for the invite.
Oh man, always, man. It was fantastic to have you as a headliner. The last time we got this has got to be the set, man, Warren. Epic calls throughout last year, this year. It's been an incredible run. Warren, I got it. So let's just start with the breakout in 2024. Obviously, it's on everyone's minds on gold's breakout. But were there signs that this was on deck? You had a fantastic chart. We'll have that up in a bit. But highlighting exactly that. In fact, there was a 3-year heads up. But maybe we could talk a bit more about that.
Yeah. So we came into the year expecting gold to touch $2,500 an ounce. And really, there's two real big factors. Number one, I just think of gold as the ultimate pivot asset. I think that we're running, and we'll talk about this more, unprecedented fiscal and monetary experiments, and ultimately all those roads lead to debasement of the currency, which is why we're here talking about hard assets, and gold is kind of just your quintessential place to go when there is debasement. What one thing we like to look at, because there is always a dollar impact, because everything's priced dollar versus gold. We like to look at gold in an equal weighted basket of currencies, and this is where we saw the breakout occurring first last year. So gold versus a equal weighted basket of major 8 major currencies, and what, I'm sorry, what was that, Scott?
I was just saying we're going to throw up that chart that you're actually talking to so that everyone can see.
Yeah.
So you keep on
Yeah,
going.
this is the chart. Really what we saw was like a triple top out of gold, and I used to say you don't get a quadruple top because at some point you end up breaking through that resistance, and that's what we saw in dollar gold. But we had that we you can see the blue line is equal weighted gold, and you could tell that we were going to break out all the way back in Q4 of last year on equal weighted gold, and we had established an uptrend basically throughout the second half of 2023 in equal weighted gold. So what you're distilling in this chart is underlying gold strength that can often be masked by dollar strength because of maybe inconsistencies in central bank policy and things like that. And I think we could see that again going through Q2, Q3 of this year. So that's one of the key heads up for us and within our gold model.
And more just on that point with respect to like gold breaking out in other currencies, is that like has the US dollar always had this competitive aspect relative, like do you see that first, you see the breakout in these other currencies, and then almost is there like a tipping point, or is that how to think about it?
There oftentimes, and so that's what we've done in our model and in our modeling is to you want to make sure that if you're getting a move in gold, you're not just picking up on some dollar aspect, and so that's what the point of that is. And so oftentimes, you'll end up seeing a gold move first in an equal weighted basket of currencies, and then it comes through on a dollar cross basis.
Fantastic. So Warren, you have, if you guys are looking for charts, Warren's got the best chart. Oh, make sure you follow his feed on Twitter, man. I'm fortunate. We're fortunate to have you blessing us with these great charts. You flagged another great chart. We'll have that up in a sec. But it was from 314 highlighting that gold has broken free of the historical correlation to rates and the US dollar. And so the chart's going to speak to rates, but something that has already occurred in US equities, as you point out. What's behind this phenomena, and is there a historic precedent for it, Warren?
Yeah, this is the so I mean honestly what we are is a data-driven shop, and so we model things, we look at history, and history's messy. That's the one thing you'll learn is data and history are messy. You have to be honest about it. When we wrote up, we have our master gold model, and we wrote the intro report to that all the way back in January of 2021, where we worked through all the different indicators and the things in that model and what we lean on to call gold. And in that report, we called gold a chameleon asset. And that's because you go through periods where you have these default assumptions that this indicator is going to call gold perfectly or whatever. And the truth is, there are regimes where indicators work, and there are regimes where it's really nothing. And if you zoom out and look at and we'll talk about this in a minute too, when you zoom out and look at the gold chart, you go through these long periods of consolidation and then breakouts. And so you really need to survive and identify these periods of consolidation, but most importantly, identify when that breakout comes and then ride the breakout, ride that wave in that repricing of gold. And so what I'd say is there's a big assumption with all that. There's a big assumption that real rates in particular drive gold. And that when real rates are rising or high, gold can't perform. And in fact, that's just not true. If you look at history, there is a modest relationship between real rates and gold, but there are plenty of times. We went through and looked at 6-month rallies of 20% or more in gold, and there were multiple cases where real rates based on 5-year tips, based on 10-year tips, are increasing during those rallies. You saw that in the early 2000s, 2002, 2003. You saw that in the recovery period in 2009, and you're seeing it again now. Real rates are increasing, and gold's doing this, is rising alongside. And I think it's thrown a lot of people off. It confused a lot of people coming into the year, and it was something we were able to look through, honestly.
Warren, just a quick follow up on that. Were you able to find data that would show central bank buying over those periods to say, like today we're seeing, record buying, to say this kind of catalyst was happening at that time?
Yeah, we've seen central bank buying pick up really since the Russia Ukraine conflict. Once Russia invaded Ukraine, we've seen, and then the sanctions regime kicked off. I think there was a break point there, and central banks have been in accumulation mode since that point in time. And so, once you see a geopolitical break point like that, in all of these, we have these all of these cross currents, and I'd say the way we think of it is gold is ultimately reflecting trust, institutional trust. And so we're in a period right now where institutional trust is in, I call it a bear market, which
Yeah.
is a huge tailwind for gold. And so, that's again, you're missing the forest for the trees if you don't go in and buy gold, because the 10-year tips or the 5-year tips yield is rising a little bit, but you've got massive reshuffling of the global order going on, potentially conflicts popping up in multiple spots around the world. 7% of GDP pro-cyclical deficits while we have unemployment rate below 4%. All of these things point back to ultimately uncertainty and a lack of trust, institutional trust, undergirding the backdrop. So that points to gold. We did see central bank buying for the last couple of years. Is that exactly why gold's rallying now? I don't know. It's been going on under the surface, honestly, for a little while. And I think sometimes you get a breakout like this, and then people want to you always want to have a reason or excuse, and ultimately it's just more buyers than sellers, and central banks are involved in that.
I love that quote. I put it in the chat on YouTube so it's solidified. Institutional trust is in a bear market, man. That's a very well put.
That's the
And
quote.
yeah, absolutely. So you nailed gold coming into the year. 2,500 target. Could you talk now? Obviously, like you've talked a bit here about it, but maybe you can talk about the fact that gold is less there's clearly an art component to gold, and like as you're saying, like, right, there's the quantitative elements, like real whether it's real yields, and you guys weren't weighting it as importantly now, and like, so it sounds like regime changes as important as the variables that go into to gold and how you think about it. But maybe just kind of peeling it back, could you talk to the factors you're weighing more highly right now, and what would cause you to get more bullish, to take your 2,500 price target higher or lower? Just understanding the levers that you feel are the most important right now.
Yeah, gold is, like you said, there is no underlying cash flow, so that's going to tie us to, this is the formula. So it's more or less historic analogs, and it's understanding, like, basically what happens when we go through these long periods of consolidation and then a breakout, and where does that usually take you. And so that's kind of where we said, look, even conservatively, if we break out to new all-time highs on a weekly, monthly chart, we basically think we're going to be at $2,500 an ounce at some point in 2024. That's way conservative for your normal breakouts for gold. Like, this bull market should take us up to $3,000 an ounce at some point, whether it happens this year or next year or some other point in the future. I don't know. But the history of gold is that it anticipates Fed pivots, which I think we're on about 8 months in advance. And so that was part of our thesis there. And then it breaks out violently to the upside from long periods of consolidation. So you could check both of those boxes and then basically go back to history and say, okay, where should we see this rally go to? 2,500 is like the first target, and then you move up to like 3,000 over time. So that it's again, like you said, it's art, it's not science, and it's not like you can't move around a little bit. But the lesson of history is that these moves are kind of like runaway freight trains. You don't want to fade them, and you don't want to get off the train too quickly. It keeps going.
That's a great point, right? Like to your point, like it's not tethered to evaluation, right?
Exactly. Yeah. And I mean, once once the sentiment turns and you're like you said, you have central banks buying and you have investors buying. I mean, we broke out this time, we broke out to new all-time highs with GLD flows being negative. And so when you have massive ETF, it was total ETF flows were negative during that breakout, which is another thing that gave us pretty solid confidence. Like, you haven't even seen the underlying investor sentiment get turned bullish yet. And so yeah, so to me, there's still a good runway in front of gold. And from a diversification standpoint, it makes a ton of sense to have a gold allocation.
Perfect lead into the next question from the diversification standpoint. And so maybe I could just, you've been bullish gold in a portfolio context. Is now the time that is gold max overweight? Just maybe like, kind of giving it that, how do we think about like, we think government debt, deficits, war. It feels like this is the time if there's an insurance component, how should I think about it? I assume you should always have insurance, but should this be a mid-weight or is this an overweight component?
And we've already had a hiking cycle.
Yes,
too.
exactly. And you've already had a hiking cycle. But yeah, but maybe some context on how an investor should think about, is this max insurance, medium insurance component right now?
Yeah, no, I would be overweight in gold. I think you have to, whatever your alternatives bucket is, and hopefully everyone spent some time thinking about their alternatives bucket in their portfolio. Because again, I probably sound like a broken record if you went back, whatever it was, 4 or 5 months ago when we had our last conversation, or anyone's paid attention to what we say at 314. I just think that this future, and that we're in the future now, is going to look much different in the recent history. So 1998 to 2021 is going to be one era, and it's dead and gone. And that's the era of stocks and bonds moving opposite of each other. And really, the only big macro concern for investors at that point in time was recession. And so your bond book hedged your equity portfolio quite well. And it was a perfect Goldilocks setup for 60/40 portfolio. You aren't going to get that anymore. And it's not going to perfectly be solved by, being totally honest, by gold or Bitcoin or any one thing. You need to have an all hands on deck approach and kind of go towards a max weight in that entire bucket. And gold's one of the best diversifiers. I would certainly agree with that.
Fantastic. And so, we're with respect to the Fed, obviously, as and when a rate cut happens, it's getting pushed out. But could you talk us through your outlook on that front? So when that cut comes, given that we're rallying, real yields haven't mattered. It's been uncorrelated with interest rates. Is this in the here and now? But when real yields do come back in, is that the kerosene on on the fire moment? Like, is that just kind of like you break out into a new space for gold? How should we think about that moment when that Fed cut ultimately comes?
Usually gold does most of its rallying in advance of those Fed cuts.
Okay.
And so I usually, like, if you go back, as a good example would be to look at the 2018 rally and when gold broke out. Gold broke out, I think, just doing off memory, like April of 2018. The Fed was cutting by December of 2018. And that's a rough playbook of what we've been following, is that gold's going to be one of the earliest pivot assets. Our view on the Fed, we came into the year, expecting some soft landing, mid-cycle adjustment cuts. And we have recently kind of backed away from that. And it's just being data driven. Is that when you look at the inflation math and you look at what, even like today, the core PCE today coming in at 0.26% month over month, you're going to need, just really quickly, the math on that. In order to get to the Fed's SEP estimate of 2.6% exit rate on core PCE this year, you need core PCE to be sub 0.2 month over month gains, average that for the rest of this year. When I look at what's going on underneath the surface in the housing market, I don't think we're going to get there. And so if the Fed sticks to its guns and sticks to its requirement that core PCE needs to fall to 2.6% by the end of the year, which is still above its technical target, I have a hard time seeing cuts at this point in time, without some kind of stress in financial markets and maybe another round of tightening financial conditions and then a potential sell-off, and we start this whole cycle again.
Man, the time goes so fast. I got to get to two more key questions here. You guys have had a long-standing bullish stance on Bitcoin. It's been a phenomenal launch of these Bitcoin ETFs. Does this fundamentally change your outlook with respect to institutional flows and where Bitcoin can ultimately go?
No, I think that Bitcoin has a lot of blue sky ahead of it in just because, again, I'm not a crypto or a Bitcoin maximalist or whatever. Like, I think it has a place in portfolios. I think it has a use case. I think the ETF adoption is massive because it opens up access for a large number of investors and institutions that weren't going to buy it beforehand. I had a friend who was a big bank and is a big Bitcoin person tell me a long time ago he thought that in order for Bitcoin's total market cap to hit the size it needs to be to play the role that it eventually is going to play in portfolios, it needs to go to something crazy like $300,000. I don't know if that's true or not. I mean, when I did the numbers back of the envelope, it made some sense what he was saying. The point being is that the market cap has to expand to allow for these institutions, if they want to play in it and make it a part of portfolios, to ultimately have a big enough space to play in. And so I think it's inevitable that it's going higher. Whether that means next month it goes higher, I don't know. But the ETFs are key to the story to me.
Fantastic. And Warren, I'm going to end with a question from YouTube. Could you explain your strategy for managing assets like gold and Bitcoin during market ups and downs? And maybe I can dovetail that with a question for me. Like, can gold and Bitcoin coexist as store of wealth assets?
Yeah, I think they can coexist. They have coexisted this year, but I think you want to. We have clients we advise on this, and they're trying to help them get their allocations right, and just how we look at the world and how we philosophically look at it. I think you want to. They can both coexist, but you want to be careful not to double overweight the same exposures, and so just be mindful of that, and probably look at the portfolio holistically. Bitcoin plus gold versus keeping them completely siloed. But they can coexist, but at the same time, be careful with your exposures, just like anything.
Warren, always a pleasure, man. You know what? We're going to hold you. I was going to ask an oil question, but we're going to do that for the oil conference, man. We'll hold that. We'll hold that one. Warren, thank you so much. Always a pleasure, man.
Thank you,
Insane insights. Always great leading off with Warren Pies from 314 Research.
Thank you, Warren.
Thank you so much for having me. I appreciate it, guys. Always good to talk.
Thank you, Warren.
All right, everyone. We started off with a bang. I hope you were listening. A lot of good little nuggets from Warren. And the train keeps on rolling. We're going to take a quick break, and we're back up with Bob Elliot, CEO, CIO, Unlimited Funds. He's also a wealth of knowledge, so don't go anywhere. All right, everyone. Grizzle Hard Money keeps on rolling. Remember, if you're watching on social media, give us a like, give us a retweet, get the word out. You don't want anyone to miss any of this info about hard money. Come on. Like, we want to keep it all for ourselves. It's that valuable. But we also like to spread the wealth. So let's spread the wealth a little bit. All right, coming right up, we got Bob Elliot. He's CEO, CIO of Unlimited Funds. He's on deck next. Bob, welcome back to Hard Money. How are you?
Hey, how's it going? I love this. This is the only interviewers that I ever talked to who are wearing suits and hats at the same time.
Let's hope it continues that way.
It's like draft day, but every conference is draft day. You know what I mean? It's
Bob, we picked you second pick out of the whole draft. Maybe number one next year.
This is our starting lineup. This is the starting lineup. They're different. It's you got your point guards, your centers. Bob's a power forward. He's a power forward. Getting in there, getting the rebounds, getting dirty.
Oh, that's right. You got it. I was always the tough guy in front of the net playing sports. So they always
and a little deep cut for anyone watching Hard Money from last time. I don't know. It's Tom started a meme when Bob. So here is Bob. Yeah. All right, let's not waste any more time. Yeah. We got to talk to him. So, Bob, I want to start off. It's been a blast catching up with you with these hard monies because we were looking at Bitcoin, and every time we have one of these, we look at them at Bitcoin from a similar place. I feel like, well, we're not Bitcoin maxis, but we're willing to definitely give it a good chance. So I just wanted to follow up with you now. Since we last spoke, we've had developments in the Bitcoin ecosystem. Have they made you, number one, warmer or hotter on Bitcoin as a store of value, digital gold? Number two, Bitcoin as a currency, a medium of exchange. Would love to get your take here.
Yeah, I think the biggest thing I'd say from the perspective of an investor is the issuance or creation of these spot Bitcoin ETFs really does change the picture in terms of the protections that individual investors have in order to invest in the product. The ETFs, particularly those issued by big name institutions, either explicitly or implicitly have guarantees that if various issues come up related to the custody of those assets, that odds are those companies are going to back those products and ensure that customers are made whole. And that's a pretty big deal, considering one of the biggest issues in this space over the last decade has been a question of whether or not people were actually, having had the exposures that they were expecting when using other intermediaries. So pretty much changes the picture there.
Yeah, it gets rid of a lot of the friction and sticking points that an investor would have, especially like wealth managers, to put a client into digital assets.
That's exactly right. And so I think what it does is it opens up the opportunity to say, for the folks who are curious about Bitcoin, want to start to leg in a little bit, essentially the cost of doing so in terms of just buying an ETF in your brokerage account, it's just a lot lower than going and setting up an account at a third party, and it's not related to your existing assets and how exactly do you hold it. Now, of course, there were other options out there like the Grayscale Bitcoin Trust, but without necessarily the protections that exist in the ETF structure, with big, trading well above or below the fair market value of the asset, and so this, and actually at considerably higher cost. Now we're talking about investing in Bitcoin at 25 basis points of fees. So totally changed the picture there. And I think what we're seeing is some incremental interest directly as a result of that. I think the real question is it good enough to be a primary cornerstone of people's asset portfolio? And the volatility so far, it's not quite there yet. And so that's what we're seeing,
Bob, I'm going to dig into that. I want to start first on the transaction costs since the halving and ask you what that may mean for Bitcoin's chances of becoming an actual functional currency. So we've seen that transaction costs have gone up. It looks like they're kind of unrealistic for any smaller transactions. I mean, you're not buying a coffee. The fees are too high. Have what you've seen post-halving, transaction costs, just friction costs, does it make it less likely or more likely that Bitcoin could ever be like a currency with transactions built in?
Well, I think, there's a lot of other experts in the world of Bitcoin that are probably more knowledgeable than me. I think the main question.
I like your angle. I like where you come because you're not a maxi. You're looking at it as an asset allocator, and so it's a very
I think the basic question is, in order to be a currency, the transaction cost of a currency has to be very low, right? Obviously, like the transaction cost, if you have a $100 bill in your pocket, is zero, right? Because you just hand it to somebody, and I think when you start, you just hand it to them. That's that easy, right? Or swiping a credit card, the transaction costs there are a few percent. I think the challenge with it being a transacting currency is exactly what we see here, which is the pace in which the transactions occur and the fees that it takes. Now, I'm sure there's going to be a lot of folks working hard to figure out ways to reduce these for smaller scale transactions. But until we get an environment where people can reliably believe that the transaction costs of can be very low, I mean like 1%, and the transactions can be immediate, it's going to be very challenging for it to serve as a transactional currency. Now, I'd separate that from being an intermediary to transition wealth. That is something, particularly in an environment, where you're talking about larger amounts, right? You're not talking about buying a slice of pizza. You're talking about preserve your savings, say in an economy where there's questionable ability to save in banks and things like that. That's where you might be willing to pay a more meaningful transaction cost to move a larger amount. And you might also be not so sensitive about transacting instantaneously, but transacting over time. And so you put those things together, and I actually think that part of it still remains, even if the small scale transactions are no longer are have yet to be proven out sufficiently to make sense to do.
Bob, you've done some of the best work with respect to looking at Bitcoin as a risk asset, more correlated with, say, the NASDAQ and that side of the tech world versus, say, the traditional gold. Maybe you could talk to us about, that's obviously an evolving trait of Bitcoin, but where's the DNA of Bitcoin right now?
Yeah, I mean, I think one of the key questions for any allocator and really for any widespread investment adoption is someone has to sit there and understand where and how Bitcoin behaves relative to their overall asset portfolio. And I think that's one of the challenges of more wide scale adoption is, when does Bitcoin go up and when does it go down is pretty uncertain in terms of when you're thinking about it from an investment allocator's perspective. I think if anything, what we've seen an increase in the idiosyncrasy of the return related to Bitcoin. Whereas a couple years ago, it basically looked like, the Qs times 3 or something like that. The fact that we've seen the market action that we have and the magnitude of the market action connected to the spot Bitcoin ETF dynamics over the course of the last year have made it even more idiosyncratic. And so I think, if anything, while the Bitcoin issuance, the spot Bitcoin ETF issuance, has been very valuable in creating an infrastructure, it's been detrimental to understanding how the asset transacts, because it's made it more idiosyncratic in terms of its returns. And so my guess is over time, we'll sort of get back to something sort of more normal stability once the sort of initial flows that come from that play out. And I think even in to be honest with you, the last couple of weeks, it kind of feels that way a little bit, that we're kind of getting back to the norm. And if it ends up being primarily a different risk asset, well, that has a use in a portfolio, like in the same way the Qs have a use in your portfolio.
Of course, yeah.
But it isn't necessarily quite as attractive as gold from a diversifying perspective if it remains so correlated to tech, to like tech or risk assets.
I mean, as an example, you're talking about, I'm thinking of the idiosyncratic nature of it lately is how with these geopolitical tensions, gold was going up, Bitcoin was going down.
Yeah.
That's not what you would expect if it's a store of value, right?
Well, I think many people have proposed that Bitcoin is will protect an investor against geopolitical risk. And I think the challenge with that thesis is it's not a fundamental thesis, it's an empirical thesis, in the sense of you have to observe how people respond when you see those circumstances emerge. And I think, if anything, actually what we've seen is a bit of a step back along that dimension. If you go back, back to the Ukraine, the Russian invasion of Ukraine, Bitcoin did seem to trade a little bit positive to geopolitical risk, meaning as the risk was increasing, Bitcoin went up. And I think this more recent period, with the conflicts that have emerged in the Middle East, we've seen Bitcoin trade closer to a risk asset in the short term, and that certainly looks like it's moving further away from being that geopolitical risk hedge as its adoption has become more widespread.
Got it. Now, Bob, I just want to move a little bit on to your outlook on interest rates, because you post some great stuff on that, and we see in real time how you have a pragmatic, data-driven view on rates. So it looks like, a few months ago, the market was pricing in a number of cuts. Now it's gone to a point where the probability of actual rate hikes, not cuts, is no longer just a tail risk if you look at market pricing. So I'm just curious, at what point does the probability of hikes start to impact asset prices, do you think?
Yeah, I mean, I think we had a unique constellation of events over the first quarter where expectations of U.S. growth were very weak, and expectations were that the Fed would cut interest rates relatively significantly through the course of 2024. And then in the first quarter, a bunch of data basically came in and showed that the U.S. economy was pretty strong, all things considered. Even up through today's data, with very, very strong household spending. The challenge, and that was a big, important driver of why stocks rallied through the first quarter, was because growth was much stronger than people expected. But now, expectations of growth in the U.S. over the course of 2024 are now at 2.5%. 2.5% real growth in the U.S. is pretty darn strong. I mean, that's about as good as you're going to get in a late cycle environment. And so that has set expectations very high. We also have earnings growth that's expected to be 17% year over year by the fourth quarter. Those are very high expectations in terms of growth. So it's going to be hard for equities to meet that. And that's happening at the same time that there's this pressure for interest rates to rise. And I wrote something yesterday, which I said we're in a bit of an air pocket, which is that interest rates have risen enough to put a lid on the ability for stocks to meaningfully make new highs. But those interest rates haven't risen enough to create enough of a drag on the economy to shift over to an easing cycle. And so we're in a difficult position when it comes to risk assets, both bonds and stocks, because we're not quite, things are not quite bad enough to get that easing that will help, create a reacceleration, but they're not quite good enough relative to the expectations to keep asset prices going.
So if you were to have like kind of a red zone for rates, say like the 10-year, is it somewhere around the 5% range? You'd start to get worried about what will happen to asset prices?
Yeah, I mean, I think giving us last fall was a good sense of what was going on. We had interest rates touch 5%. We had stocks fall to 4,100, and that was a very short period of time and had a relatively swift response from the Treasury and the Fed to ease monetary policy, or at least indicate that they were going to ease policy. And we didn't quite get the growth slowdown that was expected, but we were on a path to get there. If interest rates had stayed at the same level and stocks had continued to decline, even modestly. And so I think those are sort of the targets when you start to get rates that are going to be, at 5% or above for more than just a moment, for months. And you start to see stocks fall something like 10, 15% from their highs. That's sort of where you start to get the types of dynamics that would typically create a turn in the economy. And we're not there yet, is the reality, both on bond yields and also on stock prices.
Gotcha. Now, I just want to move on. You made a quick comment on earnings, how a lot of good times are priced in. So are you thinking it's basically earnings expectations are kind of priced to perfection, where I saw a good chart that I can throw up that shows some of basically the Mag 7 earnings growth versus the rest of the S&P 500. You see Mag 7 growing strongly now, supposed to decelerate, but still be growing pretty well. But then the rest of the S&P will be picking up and be the strongest growth in 4Q. So does that introduce risk to you? Like, how do you characterize when you see this? Where are the risks in this type of chart?
Yeah, I mean, I think it's pretty hard. The U.S. economy is doing pretty well, but its growth is at, its nominal growth is at 6% a year, which means that essentially the top line growth in the in earnings, right, the sales growth in earnings is about 6% a year. You can't really get away from that. It's not totally exactly right, because they can take share from
slide 3. Next slide. This is the one that he's talking to.
They can take share from private companies. They can take share from abroad. But I think in general, it's pretty darn hard to grow meaningfully earnings much more than sort of 6 to 10%. If we have that sort of 17% or 18% earnings growth, and GDP growth is growing at something like 6%, and margins are already at pretty close to secular highs, the combination of events that need to occur to get you to that 17 to 20% earnings growth by the end of the year, it's pretty tough to pencil out what exactly is going to do that. So the expectations are very, very high, considering a macroeconomy. They need something meaningfully better than the already pretty darn good macroeconomy that we've got right now.
Great. That's a very helpful outlook. So Bob, just before we run out of time, I wanted you to tell us a little bit about unlimited funds and some of the unique exposure you've constructed for public market investors. It's definitely fascinating.
Yeah. And Gina, maybe I'll just add one question before Bob. Do you think the halving has matured Bitcoin? And then we get to that. I want to from YouTube, from Robert Hernandez. So I want to make sure we're getting at least one question from the audience, and then we got to kick it to unlimited. But
I appreciate that. I think folks who are very interested in Bitcoin often point to the supply constraints in the market and citing that as a critical component for the asset to be a storehold of wealth over time. And I just emphasize that if you look at things like gold, there's lots of price volatility and the supply side is relatively constrained. Supply can come not just from essentially minted new supply or mine production in the case of gold. Supply can come from people just desiring to sell, and that is a much more influential pressure, the desire to sell, than the marginal impact of incremental supply. And so I think it's probably focused. I find the focus on the halving to be, first of all, everyone knows it's happening, so anyone who's thinking about supply is already considering that. And second of all, it's just a modest impact relative to the supply-demand pressures that exist from buyers and sellers in the market. That's what's going to drive the price of Bitcoin much more than that incremental, essentially mine supply that exists in it. As for unlimited, I'll give the very quick idea, which is I was in the hedge fund business for a long time and decided to take that understanding, build technology that allows me to replicate how hedge funds are positioned, and then package that up into an ETF structure that folks can, if you got $20 or $20 million, you can go get exposure to the hedge fund industry in a cheaper and more tax efficient way. And, people are interested in that. You should go check it out and learn more about what we're doing.
Now, because you're always looking at hedge funds, I just want to ask you quick, are there any interesting trends that your models are showing in how hedge funds are positioned right now?
Yeah, I mean, I think probably the biggest one is that hedge funds have actually not been particularly well positioned. They've been pretty neutral, actually, things like gold in the recent period. And so I think there's always a question when you see a run up in a particular asset, who's the next buyer in the system who can help drive the price higher. I think it's notable the hedge funds who traditionally actually have been quite leading in terms of catching price appreciation in gold, a very good indicator of previous rallies like back in 2018, have been sitting on the sidelines here. And I think the market action as well as the monetary policy dynamics ahead may bring them back into the gold market, and they could serve as a relatively substantial incremental demand for gold at a time when there's a lot of tailwinds in place for the asset.
I like to hear that.
Bob, thank you so much, man. What great insight. Bob, always a pleasure.
Thank
Core
you,
part of the starting lineup of hard money. That's Bob Elliot, Unlimited. Thank you so much.
Thanks, Bob.
Thanks for having me.
Appreciate it.
All right, everyone. You've been hearing from the buyers. It's time to go to the builders. So we're going to take a quick break, and we're coming right back with Shane Williams. He's CEO of West Red Lake Gold. Don't go anywhere.
We got the man, Shane Williams, CEO of West Red Lake Gold. Shane, thank you so much for joining us.
Thank you, Shane.
Hey guys, I love to be on. It's great to be on with the Hard Money Conference.
Oh man, we got a big crowd. We got over 1,000 people on Twitter. This is the show. Couldn't have picked a better time. Gold's pumping, gold stocks are pumping, West Red Lake is pumping.
Wow. Yeah, no, it's a nice time to be in the market, and the assets we've picked up, it's perfect timing. We look like geniuses from our timing.
It's great when the market gives you that.
Shane, we need to kick it off. For those who don't know West Red Lake Gold, could you give us an overview of the company? And also, the company is unique in the sense that you're more than a company that's just in pre-production. You have that aspect of the business, but you're very much in exploration mode, and you're focused on that side. Could you tell us about West Red Lake's assets and what it allow you to do to ultimately build a profitable miner?
Yeah, we've seen a little bit of a disconnect in the market, as you're probably aware. We've a lot of the majors, they're not really doing the development anymore. They're more buying assets. And you have a lot of the juniors who are very early stage. So there's a bit of a disconnect, and there's a bit of an opportunity that we saw between getting a developer and moving quickly to cash flow. So we're getting the uptick in that gold price. So we're a developer based in Red Lake region. Look, Red Lake is a famous region in Canada. Lots of gold. Over 40 million ounces of high-grade gold have been mined in Red Lake over many hundreds of years. So, if you want to be looking for gold, you need to be in elephant country. And so elephant country is Red Lake. So
there we go. We got the map up here. This is elephant country for you.
Yeah, this is elephant country, and a lot of developers have stayed away from this area. We had Goldcorp had a mine that was bought by Evolution, which is a big major gold producer. We had the Great Bear Story a number of years ago, which was bought by Kinross Gold. So there's no really developer in that region. If you want to play Red Lake, if you want to be part of that high-grade story, we're the go-to name.
Yeah. Fantastic. And so with Scott, with respect to your exploration strategy, it looks far more like you guys are more methodological, less risky. Like, could you help us understand, versus a typical explorer? Is that because of the wealth of history of data that you have on these two properties? They could help us understand that.
Yeah, look, I think it's important for the viewers to understand, and the listeners. Look, Matson mine historically has been mined for a long time, back in the 30s and 40s. And so there is a lot of data available. I mean, when you look at our database, drill hole database, there's, literally thousands of points of data to look at over and target new areas. But remember, at the time, gold prices were in a much different environment. It was much harder to mine. There was no new exploration technology. So they kind of high graded. You're in the mines that you want to high grade. You want to take out all the best gold when gold prices are low. So that leaves a lot of opportunity for us in a new gold environment, in a new way of looking at exploration, applying modern techniques. And we have all that data. So we can data mine, we can use AI technology. There's a lot of new technologies we can use to target new exploration areas. So while we have a lot of resources already on the books, there's a wealth of data, wealth of opportunity to grow further. And remember, mines in Red Lake are very deep. They're deep mines. Their Evolution mine, which was the original Red Lake mine, they're mining down at over 3,000 meters. These systems continue very deep, and we're only down at 1,200. So there's a lot of opportunity to grow both laterally and in depth, which makes it a very exciting story.
Exactly. Now, I'm going to bring that back too, because that's a helpful visual for everyone. Now, I saw you just added another rig to do some definition drill work in Madsen. You had one going to two. Now, is the goal here to speed up resource additions so that you can accelerate the development timeline? What's the thinking behind adding that rig?
Yeah, we've kind of two strategies. It's really two strategies at one, really. One is to add rigs to explore on the periphery and down at depth. The other one is more that definition, as you said, that definition drilling, which will allow us to move forward towards production. So Yeah, some of your listeners and you'll be aware of the Lassonde curve, which is more,
Yes.
a development timeline, which allows but we have it both going on. We have that exploration phase and we have that development phase, and that's pretty unique in the market today. A lot of people are the early exploration who can do the exploration, but it takes about 10 years today to build a gold mine, as you guys will be aware and your listeners will be aware. So, in this current gold market, you got to strike when the iron is hot. And so that gives us the opportunity to move quickly to production, but at the same time explore and really see the potential of this deposit.
Yeah, this is what I think it's important for people to understand. Like, exploration sounds exciting, but you're not elephant hunting. This is a story where it's data-driven, methodical exploration, right? That's really the way to think about it.
Yeah, it is. This is definitely not early stage production. We have over 2 million ounces already on the Madsen project defined, and that's at high grade. That's around 7 grams. So we have a good base to start from. So as I said, the first strategy is around definition, further defining that around mine planning, etc. And then from there, in parallel, we are doing some depth extensions, some lateral extensions, which really will show people the potential, the real potential of this deposit. Remember, the Red Lake mine was a very, very high-grade mine. I think they operated around, they found a high-grade zone deep down in the mine, and the average grade was 70 grams. And this is sort of the potential of these areas. They get very deep, and within those systems are trapped these high-grade zones. So that gives the real opportunity for the exploration phase, but in parallel, the de-risking phase. So yeah, it's an exciting time for West Red Lake.
Most definitely. Now, I'm just curious what improvements will be key to making sure that a mine restart is profitable and goes smoothly in your head.
Yeah, it's more that de-risking phase. When we picked up the Madsen project, actually it was in the CCAA process in Canada, which is in the Canadian equivalent of the bankruptcy process. So, the previous operator had a few challenges that they did, and so we were very opportunistic in our acquisition, and we picked up that asset. But we've learned from that lessons. They had a couple of technical issues that they didn't really get right, and a lot of it was around that drilling we talked about, and that really definition drilling. So we were lucky that we could get in there, understand the issues, and move forward with that strategy on that definition drilling, and that de-risking, which is really key to building a mine. And also from a resource stage to a reserve stage, which is really what you do lastly before you design that mine and move forward. So, as I said, de-risking, moving forward and grow and into production very quickly.
Great, that's helpful. Now, I want to talk about funding. You guys recently did an interesting funding deal.
And everyone should be paying attention to this. This is like, this is really like something unique. And like Shane, yeah, go ahead, Scott. Everyone pay attention.
Yeah, because this could be the future of how money is raised in mining. So it's very interesting. West Red Lake is obviously a pioneer in this. So you did a 30 million US gold-linked note financing. Can you just talk to us about the decision to use gold-linked notes instead of, say, more stock? And briefly explain kind of how gold-linked notes work for anyone who doesn't know.
Yeah. Well, you guys will know, and some of your listeners and viewers will know, that equity markets over the last number of years have been pretty poor. They're beginning to catch up. There's a big disconnect between the price of gold and the value of the equities, the gold mining equities. So when we looked about as a developer, how would we raise money to move the project forward? Obviously, we're trying as a company to be very innovative financing, but also to work for our shareholders. Raising money is very dilutive in low asset prices. So, this is the idea of this gold-linked note. It allows us to raise money and not be dilutive to the existing shareholders and new shareholders. And the gold-linked note is sort of like a fixed debenture based on an interest rate of 12% at a floor of $1,800 gold. And basically what happens is once we're in production, part of the gold is sold to return that money to the investor. And then the investor gets the upside between $1,800 gold and today's gold price, or gold price once we get into production. So as you guys will know, gold today is around 2,300 US. So that's a lot of upside today. This is a great piece of paper as an investor. I took a large part of it myself because it's a great investment.
I
You
wouldn't
know?
blame anyone. It's a really interesting instrument that I think more companies can use. But we've talked in the past about how you have such strong backers. I'm not sure how many companies can get a deal like this done besides West Red Lake.
Great point.
Frankly.
Yeah, and historically, actually, it's been used. I could take all the credit, but historically, it's been used by Frank in a number of his early stage projects, and they've been very successful. Frank has been an investor and made a lot of money in this sort of trade. So when we looked at it all and we looked at the best way to be non-dilutive to the existing shareholders, this came up as an idea. We started to work on it. We started to get a lot of interest in it. Obviously, gold was rising in the meantime. People could see that we were pivoting for an $1,800 gold. And so that's where we got a lot of demand, and we went forward. And as I said, even myself and lots of the management team, Frank even, and a lot of high net worth investors who love gold and see the potential of gold, they took a big chunk of this. And we had a lot of demand, really, a lot of demand. We didn't have a hard sell to get this out.
And not to take away, because obviously we want to talk about Red Lake, but this I find is very like just the way to do this, and because you got to think, coming back to your original point, right? It's been a tough market for gold equities. This is that kind of bridge area where you get a lot of guys over the fence. Is that fair to say in terms of like the who was participating with their new? I'm assuming new entities that you really probably hadn't seen before come in on this.
Yeah, we got a lot of people who kind of, like you said, thought, wow, this is interesting. This is a new way of financing. And look, everybody in the equity markets are have been pretty depressed, and everyone's looking for money. And so, investors are getting a bit tired of looking for this. And then they go, wow, this is something different and I can make a lot of money. So that was really what happened. We got a lot of high net worth investors, a lot of Frank Justra's network, a lot of funds who were, not prepared to take, at this stage, back then, you got to go back 4 months, not prepared to take that risk on the equities because of the disconnect between gold and price. So, it's a good, safe way for investors to play the gold, but not take the risk on the equities or wait for that disconnect to close.
That's fantastic. And you answered, Owen Anderson had the question, could you elaborate on the advantages of using gold-linked notes over traditional equity financing, which you just answered. Now, we do have one more question from James Miller with respect to Madison. With the additional drilling at Madison, how soon do you expect to see the impact on resource estimates? Great question.
Yeah, so remember, we're quite new story. We only actually closed the acquisition back in June of last year, and so we have one rig going. We just recently added another rig to the property, and we will add another rig later in the year. So, the plan is to drill, we have a big program plan. We have 50,000 meters of drilling planned over the next 8 months. And then after that, we're going to do like a pre-feasibility study. And then you will see the value of those additional drilling and that upside. And that will probably take into Q1 of next year. And that's when you'll start to see the rewards for all that drilling and that de-risking phase.
Now, Shane, I noticed something interesting in the documentation for those gold-linked notes. It said that you would start putting gold into escrow to pay down the notes by March 31st, 2026. I got asked, does this mean you expect to be in production by then?
Yeah, one of the advantages of getting a project so advanced with so much assets already on the project, we've got a lot of value already on the project, is that we can move quickly to production. And that is our plan. As everybody will know, gold is beginning to get an uptick. There's a lot of demand, and a lot of companies are a long way from production. So we picked up this asset so that we can get back into production and ride that wave of that gold environment. So yeah, we're expected to be in production by the back half of 2025. So if you know where gold is going and you believe in the big story, just as that gold market is really getting good, we're coming into production. And so that's really the upside for the investor. You're playing the gold market, which is going to grow, but also you're playing the growth of the company. Just your viewers and listeners need to understand this previous asset was in production. The company value was $1 billion. And gold was at that stage $1,600. So if you add on the gold price where the new environment is, you add on the new value or the value where that project will go once we're in production. And West Red Lake is around a $200 million market cap. So there's a lot of upside for investors in this story. And with the team we have, the assets we've picked up, it's going to be an exciting journey for our investors, for sure.
Yeah, without a doubt. And Shane, maybe just to talk about, because I think that going into production is so important, right? Because a lot of times the view, I was talking to somebody about it, the view is that if you have a line of sight, and I'm not talking like the next 2 to 3 years of a company going into production, that, in our view, that should trade at a premium, right? Like because you have line of sight on the type of cash flow that's going to come out, right?
Yeah, as you get closer to production, you get a re-rating, and as you get closer and closer, the stocks get a re-rating because people can see you're not an explorer anymore. You're not a developer. You're actually moving to that production decision. And that really, certain investors like the early stage exploration, but a lot of the big investors prefer that cash flow, moving to cash flow. So you bring in even a different type of investor. You get in early stage and then you move there. And that transforms the company. That transforms the company over time and the value play that you're getting.
For sure. And then with respect to, you're also, what we've seen is a function is these large miners. They just don't have ounces to replace the ones that they're drilling. Like this ends up becoming a kind of best in, the bell of the ball of next producers. Is that fair to say, right? Like they're like that kind of is your natural buyers are these, the barracks of the world, right? Who need to replace the ounces that they're producing.
And the timing of West Red Lake seems the market's kind of playing into your hand on the timing you've already set for yourself.
Well, that's a little bit on the strategy back with Frank and the team. It's more of a contrarian strategy. Warren Buffett, who will say the time to buy assets is when there's blood in the streets. And if you go back a year ago, equities were depressed. Nobody cared about gold, as you guys would know. Nobody really cared about gold. And that's the best time to pick up assets. If you kind of know the setup, the amount of money that's being pumped into the system, inflation is potentially growing, the debt in the US, you got to be opportunistic, and you can see that opportunity. And this was an opportunity we jumped upon. And as I said, we look like geniuses now for the asset we've got. And in a number of years, this
Shane, remind the audience what you picked up, the value, the sunk capital in the asset.
In a number of years, this would be called deal of the decade, I'm sure. We picked up a fully operational mine. It was in commercial production. It has all its permits. And there's been 350 million Canadian dollars spent on this asset. So, we picked it up for around total value of around $30 million. We paid only $6 million in cash plus some shares. So really, and there is tax losses associated with this of 200 million. So, a total value package of around 500 million. So, when you're buying that for $6.5 million cash, that's a really good opportunity and a really good contrarian position to take.
Shane, can't thank you enough. Lead partner, Grizzle, hard money, the gold, the silver, the Bitcoin, but this is the gold right here. Shane, always great. We got a buddy up next. Shawn's on that. Last time we had it switched up. It was good energy. It's always good. It's always good to have you guys. And you know what? That was such a great conversation in the back patio at Grizzle headquarters. That was wonderful, Shane.
Yeah, no, I enjoyed it. That was my best interview this year, Thomas, and I've done a lot of.
That was magic. That was you two were magic. I do have to say.
That was a good fun.
Patio and the sauna. I don't know what it was.
We had a fantastic time. I've really enjoyed that. As I said, I've done a lot of interviews, a lot of podcasts, that was my best one this year. I really enjoyed it very much. And we're going to do it again, Thomas. We're going to do it again.
Next year, you know what? Let me just say it. We're going to throw a Grizzle conference pre-PDAC. And it's gonna featuring the same setup. It's gonna be fantastic. We'll have one heck of a party, Shane.
Yeah, I'm looking forward to it.
Appreciate it, Shane. Right. Thank you. That was Shane Williams, West Red Lake Gold, lead partner of the Grizzle Hard Money Conference. Scott, who do we have on deck?
Oh, man. So that was gold, one of the most interesting names in gold. Now we got one of the most interesting, exciting names in silver. Shawn Khunkhun, CEO of Dolly, Varden Silver. He's coming up in just about a minute, so don't go anywhere.
I'm doing really well. Doing really well. I can't help but
Oh, man,
smile.
you've been with us since day one of the Hard Money Conference. Actually, I went through the entire list. You are the original Hard Money. Because, we had to...
Mr. Hard Money.
Totally. We had to convince the gold, silver guys, come on over there. Like, you got the Bitcoin word there. But you were an early adopter. Like, guys, don't worry about the Bitcoin. We can all win. That's real right. All-win spirit, Shawn.
Really good to see you guys.
Great to see you. And look at us here. We're all winning, man. And so Shawn, talking about great interviews, with great interview with Shane. That was the backyard of Grizzle headquarters. But coming back to our interview at Beaver Creek, that was spectacular. That was a great one. We were in Beaver Creek last fall.
Gorilla interview.
That was a gorilla interview. There was a crowd behind us cheering. It was last fall. You were pounding the table that this was go time for silver. We were at $20 an ounce. About that, there was a lot of, you could. In general, the market was not exuberant to silver. You said, listen, it's go time. Look at us now. We're within earshot of $30. It's an incredible week so far. Talk to us. It's an incredible year to date. Talk to us about what's changed and what's in store ahead.
Sure. But you just had a great guest on, Shane Williams. Shane is a friend. I'm actually an advisor to West Red Lake. And I want to tell you a quick story because I think this all ties in. So a year ago, it was actually Sunday, April 16th, 2023. So I'm down in Scottsdale attending a conference down there. And we had put in a bid with Sprott Lending for $6.5 million. So I'm in a hotel room. I'm getting ready to fly back to Vancouver. And we were tasked with raising $12 million to buy the Madsen mine in West Red Lake. Okay. And in that hotel room on that Sunday, on April 16th, there was $50 million of interest. And it just goes to show that even in a depressed environment, when you buy an asset right, it's really well celebrated. And that's why, like, when we did our Silver State of the Union at Beaver Creek, and listen, sentiment was low. Like, silver had gone from, I think, $26 in April down to $20 in September there. Sentiment's really low. But you go back a year before that, silver had gone down to $18. Like, I've been around these commodities for 20 years, and I've been studying them my whole life. And you get a sort of a sixth sense about when it's go time. And there's only been a few times in my career, September 2022 at $18, September 2023 at $20, where I was literally pounding my fist on the table going, this is your all-in moment. And if you take something like Dolly Varden, last month, the stock was up over 35%. And that's what gets me excited. Like, I've been around so long where you get to know when the opportunities are there, when they're lining up, and it gives you conviction, and it makes you go and buy the Madsen mine for $6.5 million. And you look at, we brought it into West Red Lake that, and the market cap's grown by, I want to say, $180 million in the last 12 months. Like, you look at we're driving value to our shareholders. I think the stock's up, maybe, I would say at least 150%. So it's incredible opportunities, and the bull market hasn't even begun.
Well, Shawn, I think you raised a great point here, right? And so when you find opportunities, I think one of the first interviews that we ever did, you were talking about Dolly Varden. I thought from a strategic perspective, it was really powerful, right? Take away the commodity price. Can you, do you have the levers to add value? And that kind of, irrespective of commodity price, when you have more levers, it just creates incredible value. And with Dolly Varden, it was obviously, the drill pit was an incredible component of that. But in the West Red Lake example, it's just, picking off an asset at an incredible value.
Well, there's two things that both companies have in common, Canada and grade. And I think that works in any price environment. In the case of Dolly Varden, it was, what attracted me was primary silver mines are rare. Okay. They only represent about a third of the market. right? Most of the silver we get is thrown off as a byproduct. So getting a primary silver mine is super rare. Finding a primary silver mine in a safe jurisdiction, that's a unicorn. And that's what Dolly Varden is. Dolly Varden is a unicorn asset. And it was a unicorn asset that, because silver was trading at $16, $17 an ounce, was trading at 30 cents a silver ounce in the ground. And what my team has done through acquisition, through discovery, through patience and perseverance, we've added 100 million ounces of silver equivalent. And now the company's in all categories is hovering around 150 million ounces of silver EQ, trading over $1 a silver ounce in the ground. Now, why I'm so excited about our future is this is the type of company that ounces should be trading at $4 or $5 an ounce in the ground, and we have the ability to add ounces for pennies an ounce in the ground. So there's your value creation.
That's very well said, Shane. Shawn, that really is like, just that aspect, that getting that lever right in. Now, so when we look at silver, it's interesting relative to gold, right? And it kind of wears a lot of different roles. Industrial demand is something that sets it apart from gold.
Very important.
How should investors think about that? And there's a new economy angle to it as well. Given the particular uses, how should we think about that? As it's separate. Well, obviously both are important. They historically been tied together. But is that something else that provides a unique extra lever for silver investors?
Well, I think the way you have to look at it is all the gold that's ever been mined could fill up 2 Olympic-sized swimming pools. Okay, and most of the gold, like I'd say 99% of it, is for monetary use or for jewelry, and it's so valuable that it does get recycled. So all the gold that's ever been mined is essentially still with us today. Whereas silver, 70% of the silver that gets mined gets consumed in industry. And because silver is trading at an 85-to-1 silver to gold ratio, a lot of it doesn't get recycled. And, if there's probably about an ounce of silver on my desk here between my laptop, my screen, my television, my cell phone. That silver at $27, $28 an ounce is not going to get recycled. And so the opportunity in silver is we are experiencing a 200 million ounce annual deficit back to back. Okay, so think about this. There's about 1.2 billion ounces of silver that gets mined on an annual basis. But we're having about closer to 1.5 billion ounce demand for silver. Now, why is that happening? Well, one reason is the solar industry is going from 3% of the silver demand to 14% on its way to 50%. So we're going to get into a universe where solar is looking for 600 million ounces of silver on an annual basis, and we've got we're only mining just over 1 billion. So what excites me is right now you've got an 85-to-1 silver to gold ratio. Gold's breaking out. If you study history, and you don't have to go back far, just go back a few years, silver outperforms gold. You go back to 2020, when gold went from $1,300 to $2,000, silver went from $12 to $30, and it went there in a matter of weeks. And so when silver goes, there's nothing that moves in the commodity sector as violently, as aggressively, as fast. It's got incredible leverage. But now we're moving into a universe where, because of the growing industrial demand for silver, we're getting to a place where I think silver could go exponentially higher. And what's great is, if I think about the few $1,000s of equipment that's on my desk here, if the price of silver went from, say, $28 to $50, it's not going to impact these industrial products pricing. that $40,000 EV, it's if we're paying $50 or even $75 for an ounce, it's not going to deter the consumer.
And correct me if I'm wrong, like there just isn't a substitute, like a clear substitution, right? So it doesn't impact the sticker. It's kind of like uranium for a nuclear plant. Like that's the thing you need, and it's not going to impact the end product in any way.
100%. You're absolutely. There is no substitute for silver.
It's a good example, uranium there.
Yeah.
Now, for anyone who doesn't know your company, could you maybe just tell us a bit more about the history of the Golden Triangle where you operate and the Kitsault Valley trend in particular? I'm just curious, how did your ownership of the land package come together? What did your geologists see where you were like, we had to buy this?
Yeah, that's a really good question. So, listen, the triangle represents the richest 20 kilometers on the planet for gold and silver. And that's a really, really, really big statement. Like, there's some famous mining camps all throughout the world. This is the richest mining camp on the planet, and it's in Canada. What started off as silver mines, Bruce Jack, SK Creek, Premier, these are some of the most famous gold mines on the planet, started as silver deposits. So what attracted me to Dolly Varden was the richest silver mine in the British Empire. It was Canada's third largest silver mine. So it's got a rich history, but I was always intrigued because I thought, could this silver deposit become a very, very large gold system? And what we're finding, what's intriguing my technical team, is as we move closer to the heat source, we're seeing the system move from primary silver, 99% silver. So what's great about Dolly is you're not getting bogged down with a bunch of lead zinc. This is, most of my competitors, they're only 30% silver. We're 99% silver. And then as we move to Homestake, which is 100% owned by Dolly Varden Silver Corporation, you're starting to move into a silver gold system. Like, we had a drill result where we drilled 93 meters of over 200 grams of silver and almost 2 gram gold. Okay, so that's a 50-50 split between silver and gold. It's a silver equivalent of like 360 grams per ton over 93 meters. But then as we move further north, we're getting into a gold dominant system. We had a drill intercept up there of 12 meters of 80 grams of gold. And just to put this in perspective, I just told you guys, this is the richest gold district, the richest 20 kilometers of gold and silver in the world. Dolly Varden Silver, back to back, 2022 and 2023, had the best drill intercepts in the Golden Triangle.
Best intercepts, best area for gold and silver. There you go. Now, Shawn, you're very active in drilling and proving out your property. You're not sitting around just saying, look at what we found. You're also saying, look at what we're going to find. So I just wanted to dig into your plans. You just released a press release that said you have 25,000 meter drill program this year. The focus is going to be a third Homestake silver, a third Wolf, and a third project-wide explorations. So I have two questions on that. Which third has the most potential in your view, and which third gets you the most excited for what you might find? And I'll throw up a chart while you're talking.
Sure. So look, the way I approach our program is I have 100% confidence in about 70% of the drilling that we're about to undertake. About 66% of the drilling is going to deliver what I think is expansion and extension results. And I have a high degree of confidence. What gets me most excited is the 30% that's going into discovery-oriented drilling, because that's where we're really going to be able to move the needle. And some are calculating that on the back of a napkin. Maybe Dolly's hovering closer to over 200 million ounces of silver today. My question is, can this be like an SK? Can it be like a Bruce Jack? Can we get something, magnitudes bigger? But I think the real story is not Dolly Varden. The real story is the BHP bid for Anglo. Right. It's the increased M&A activity. There was a news release today from Silvercorp making a bid for Adventus. There was, the Alamos Argonaut deal. We're seeing, we just saw Ross Beatty close a $300 million financing for Equinox. We saw Caliber put up a deal, $115 million, I-80, $100 million. Guess what? We're in a market. We're in an M&A market. We're in a financing market. And so Dolly Varden doesn't need more. We've got a lot here. We've got a lot. And whatever we add is, in my opinion, is gravy. But now we're getting into a market where we're starting to give some respect to these precious metals companies.
Love it. You know what? That's exactly it. So the bell has rung. The M&A market is here. That's fair to say, like full stop, right?
Well, listen, I think it's early innings, but it's begun. And, we're moving from the take under. I referenced 3 deals. The first, one of them was a take under. It was, and we've seen a tremendous amount of these take unders where a company runs into trouble. And, in this case, it was John McCluskey at Alamos making a very, very smart deal. And what I loved is I love when I see the acquiring company stock go up, because the market's just going, well done, you stole it. But we're moving away from those take unders to, we're seeing we're talking about a $40 billion bid for Anglo. These are monster deals. And the financings that I quoted you, I just quoted you $500 million of financings for 3 companies. We're in a world right now where I'm getting phone calls from guys saying, I've got a lot of money that's rolling in from generalists. Are you ready to build? Are you ready to build? And now I've got corporates saying, hey, you know what? We kind of want to get out of West Africa. Can we look at what you're doing in Canada? And I'm getting a lot of those types of phone calls. So we're in an environment where the bankers have money for me, and the corporates are keen to come up and have a look at, what's got the market buzzing about this story.
Fantastic.
Maybe
One more. Yeah.
All right.
Yeah.
So since we spoke at our last conference, I noticed Eric Sprott, a major shareholder, he's upped his stake. And then Hecla, another major shareholder, for anyone who doesn't know, they're the largest silver miner in North America. They've continued to maintain their stake as you've raised money to continue this aggressive drilling program. Should we just take this as number one, obviously vote of confidence in your recent and future exploration, but also should we assume that these same investors will likely continue to support you as you go through time?
Yeah, look, I think it's what's really interesting is, Hecla suffered a fire at Lucky Friday. And it was pretty significant impairment. They did have an insurance program in place to cover that impairment. But I thought it was telling that they increased their stake in the company by 50% since, we released the last time we sat down. That's significant. The fact that Eric wanted to lead our financing and was very deliberate of filing as an insider and getting over 10%. So, 25% of the company is held by Hecla and held by Eric Sprott. There's another 50% that are held by some of the most, meaningful, astute, precious metals institutional investors. And I'm talking about groups like the Fidelity Gold Fund that owns 7.5% of Dolly Varden. So, we've got 75% of the company in institutional hands, and those 2 shareholders I mentioned between Eric Sprott and Hecla Mining. And then we have another 19% in another corporate. So, this is a company where if you're looking to invest with really smart people, these are people that aren't here for a trade. These are people that are here for the silver. Eric's put $20 million into the company. Hecla's into the investment for over $30 million. These are material numbers into a company that's pre-production. And I think what they're telling you is this is a unicorn opportunity, high-grade silver in a safe jurisdiction. It's a past producer. It's no debt. Treasury's full. 3 rigs will be turning in 2.5 weeks. And on the back of the best drill holes in the Golden Triangle consecutive years.
And Shawn is a gift in laying out, a lot of moving pieces in a very simple to understand, powerful story. So Shawn, it's always a pleasure to sit down with you.
Always. And Shawn, a big thank you, lead partner of the Grizzle Hard Money. We were forging new territory together, man, from the start. Thank you very much, Shawn. Really appreciate the support, and it's always great to see an incredible story evolve and it's so well. Thank you, Shawn.
Thank you.
So listen, if you guys are open to it, I think we're moving into a market here. I think we should partner together here and like get this story out.
Let's do it. That's, you know what, this is we Dolly.
Who else gets the story out like we do, right?
Exactly,
Grizzle Hard Money.
man, exactly. You know what? We're proud to say shareholders in our ETF of Dolly Varden for that silver leverage. The only name we actually have for silver leverage. It's the name we know. And it's we think the timing with respect to the two key pillars here is which you outlined, the lever of the fact that silver has the leverage to gold. We're at a high ratio of gold silver already, so you got that coming in, and then which you eloquently talked about, just the industrial side of demand, and not to mention what you're adding on the drill bit. It's incredible.
Yep.
And I just want to finish with one thing. You look at companies like West Red Lake, you look at companies like Dolly Varden. We're trading at such low valuations against our net asset value that it is so wildly accretive for larger entities to swoop in here that, and that's why it's so important that we get the word out on these companies and get a reasonable valuation, which I think is multiples higher from here.
Yeah, agreed.
Let's go. It's
Let's do it.
I got this on YouTube. Shawn is the OG. The OG, silver OG. Hey, listen, before we let you go, that is a new item on your shelf. That's badass. Is that an alligator with gold teeth? Where'd you get that?
I'm so glad you asked me about that. So it's not a new item, and it's been around since the last cycle. And what it represents is there's a project, Fosterville, in Australia. And there was a company before, it's now in Agnico. And before that, it was Kirkland Lake. And before that, it was Newmarket. And before that, it was Crocodile Gold. Crocodile Gold. Now, the reason that's in this office is what it represents is you don't need a precious metals bull market to create wealth. Wealth is created through discovery. And there was about $1.2 billion of wealth created for Eric Sprott through his investment into this project. And that 1.2 turned into about $1.4 billion of investments that Eric made in the sector. And I just want to shout out Eric Sprott, who's actually, there's a picture of him on the desk just behind me there, behind those blue bulls. But I just want to say that if it wasn't for Eric Sprott, we were in a market in 2017. There was a few corporates that were making some moves, people like Barrick, people like Goldcorp at the time, which is now Newmont. But, if it wasn't for Eric, the juniors would have died. And, the $20 million he's invested into Dolly Varden and many other of our peers, he's been the lifeblood. And that golden crocodile represents what a discovery can do to an industry.
Fantastic, man. What a great way to end it off. Shawn, a pleasure as always. Foundational partner of the Grizzle Hard Money Conference. When we're saying, hey, listen, gold, silver companies come. The Bitcoin isn't part of us. We're family.
We can all be friends here.
Shawn, thank you so much. I appreciate it, man.
Thanks, Shawn.
All the best, guys. Thanks for having me on.
Thank you. That's 1,400 people watching on Twitter. We got a bunch on YouTube. Guys, on YouTube, hit it with the like. And if you're watching it on Twitter, give it the retweet. Guys, thank you so much.
Get my heart rate up.
Yeah, really appreciate it, man. Woof. Wow. That's Scott, the train
we're keeping.
end.
Oh man! So we've spoke to the builders. We're back with some of the buyers, and we're talking to Adam Rozencwajg of GNR. They write some great research across the commodity spectrum. They've been commodity investors way back when it wasn't cool. It's still not cool now. It's getting a little bit cooler, but we're gonna talk to him in just 1 minute. So don't go anywhere.
Yeah, good friend of the Grizzle, the GNR. Yeah, the guys, stay tuned. We're back in a minute.
All right, everyone, we're back on Hard Money. We're joined by Adam Rozencwajg. He's the founding partner of GNR Associates. They do some of the best work on commodities, so we're excited to have him here, talk Bitcoin, gold, silver, do it all. Adam, thanks for being with us.
Oh, thanks so much for having me. Good to see you guys again.
Great to see
Always
you,
great to
Adam,
see you.
and thank you, man. And a big thank you for, again, GNR, lead partner of the Grizzle Hard Money Conference. GNR's been with us since the early days of the resource conferences. Adam, I can't thank you enough. We have a strong relationship between Chris, and, Lee, you. It's really nice. Grizzle and GNR go way back. and
No,
Lee
it's
and
good.
Chris go way back.
Yeah.
The best friendships are always the longest, and Lee wishes he could be on today. He's just leaving Kazakhstan, and so obviously unavailable today. So you got me instead.
I think some good research is going to come from that trip.
Yeah.
Might be.
We'll see. Now, Adam, I just want to kick it off so everyone knows where you stand on Bitcoin. Can you tell us if you believe Bitcoin deserves a place in a diversified portfolio along with gold?
Look, we could talk about the potential benefits of Bitcoin from a philosophical perspective, but to me, proof of work Bitcoin has a major problem, and that's the energy intensity. And we're natural resource investors across the board. We do metals, both base and precious. We do energy, oil, gas. We are very early to the nuclear cycle, big uranium investors, and have been since 2018, right at the very, very bottom. So we're very sensitive to just how near and dear energy is, and to how strange the last 10 years have been, because it was really a respite in terms of energy security and energy supply. We basically brought on the equivalent of 2 new Saudi Arabias, both in the United States, one on the oil side, one on the gas side. And that had a really depressing impact. So I would say the last 10 years have been characterized by really cheap capital and really cheap energy costs. And we've seen proliferations of things that are capital intensive and energy intensive. And wind and solar is a big one, but crypto's been a big one too. So then you might say, okay, fine. What about proof of stake instead of proof of work? And I do think that that's pretty interesting, because from an energy perspective, that solves the energy issue. But what I worry about in that type of a paradigm, and I'm sure your listeners and viewers are much more adept at this than I am, but what I do think is problematic is that all of that embedded energy in the blockchain from a proof of work perspective, that's actually what derives the security. If you were to try and effectively compromise the integrity of the blockchain, what would it require? It would require a lot of computing power, but it would require a tremendous amount of energy to try to actually build out a chain that's longer than the current chain and be able to break that integrity. So that all that embedded energy, which to me is a real problem, is actually what gives it its security. And so when you move to, proof of stake, there's been lots written about how they could have some security compromises there. Obviously, since it's happened in the first several months, we've not seen anything in the way of security issues. But, just because we haven't yet doesn't mean we won't. So that's kind of my view on that. From an investor's perspective, one of the things that I think has really been interesting about Bitcoin over the last few months in particular is that whereas gold has really provided a source of uncorrelated returns, Bitcoin has traded a lot like a risk-on asset. And so just from a sheer portfolio diversification, from a trader's perspective, we try to be investors, not traders. But, if you're just looking at it saying, look, I don't care how much energy it uses. I don't care if it is the future or not. I just want to know, should it belong in a portfolio? I would say that the exposures that you're getting there are really different than what you're getting from gold. And I think that, that caught some people maybe by surprise. But I do think it's exhibiting more risk-on characteristics. Like Bitcoin will trade up with NVIDIA more than it'll trade, on rates or something like that, or the dollar like gold might.
Got it. That's a great perspective. Now, I just wanted to move from Bitcoin on to gold. You've done a lot of good work writing on gold. You guys are bulls on gold. Do you believe we've entered a new bull market cycle in gold?
Yeah, absolutely. I think that, when you look at the gold price, and we like to look at gold, there's people out there that think that gold's kind of the panacea to everything, that all of society's ills would be erased if all of a sudden we went back on a gold standard. It would, sound money. It would keep politicians in check. You have to go back and look at all the malfeasance that was able to take place under gold standards over time. And if the book Reinhardt and Rogoff, this time it's different, 6 Centuries of Financial Folly, he goes and talks about currency debasement under hard metals standards was like 2 to 3% per year. People would file off the sides of them, and people would start to mix alloys. It's no different, than what we've experienced. Maybe not in recent years when the monetary base has just exploded. But here we are. Gold's an asset like any other. It's not the cure of all evils. It's also not a barbarous relic. It serves a really important purpose. It's an asset that's no one else's liability. It's true wealth. And it holds purchasing power really, 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 really well. The old adage that an ounce of gold can buy a fine man's suit, is basically been true since the Greek times and since the Roman times. So the key is to try to figure out the price, the fair value, and say, is it overvalued or undervalued? Because sometimes it gets euphoric and it becomes super expensive and it should be avoided. And other times it's super cheap. By any objective measure, gold is super cheap. And it has been really since 2008. Right, when we just blew out the size of the monetary base, when the price of assets started screaming higher with QE, when you look at the what Shawn was mentioning, the 2 Olympic swimming pools of gold, which constitutes the sum total of all above ground gold that's ever been mined, and basically everything that's ever been mined is still in circulation. When you look at that and you put a dollar value on it relative to the total stock of anything, financial assets, real estate, what have you, you can get a pretty good sense as to whether gold's expensive or cheap. And gold right now is about as cheap as it's ever been. It was cheaper in the late 1990s. And we could talk about that, because I don't think we'll ever get that again. And the big reason we'll never get that again, you had the central banks puking out centuries worth of gold holdings, right? At effectively, they're willing to sell at any price. And the Swiss and the UK made the bottom in that market, selling out the last of their gold holdings, or the last slug of their gold sales, and $275 an ounce. Absent some massive forced seller like that, I don't know that you'll get gold as cheap relative to financial assets. But other than that period, you're as cheap as you've ever been going back. So
yeah, that's it's a fascinating point. And so we're looking at an absolute, like, from a valuation perspective, you guys are seeing this as an extreme buy in relation to history. Is that fair to say?
That's exactly fair to say. And so when you look and you try to put like a fair price and you say, okay, well, how does the gold price move relative to the US monetary base? The Treasury owns a bunch of gold. It has a bunch of money. Gold has gone from backing every dollar 1.7 times to backing it 0.7 or 0.07 times, or 12%, something like that. Where is it today? And under that metric, for gold to be expensive today, you'd need to be at like $10,000 to $15,000 an ounce. And when gold proponents talk about these outlandish long-term prices, that's what they're doing. They're saying, how much would the gold price have to be to cover the dollar as much as it did in other gold bull markets, right? Other euphoric gold periods. And that would be up at $15,000 an ounce. And Lee, back in the late 90s, Lee made the case for gold with the gold at like 290, maybe 10, 15 bucks off the bottom. He said, I'm undergoing a conversion. I'm becoming a gold bull. And it was that exact same analysis, was just looking at the size of the monetary base versus the value of the gold holdings. And that gave you a $2,500 price target. So with gold at 290, Lee was, I'm looking at the article right here, is on Forbes magazine, saying gold will be the best performing asset class of the coming decade. Go to 2,500. And not only was it the best performing asset class of the decade, it was the best performing asset class of the next 2 decades. That's how cheap gold was in 99. Yeah. Right.
So, Adam, I can tell you've done a lot of work on central bank buying historically and what's going on now. So I'm really curious to.
Oh, yeah, go ahead.
Yeah. I just want to dig in a little bit on what your view is on that. Like, as you look at a cycle, there's always central bank buying or selling. Is this what's happening now, this record amount from China and other countries? Is this like a pull forward in this cycle where, they may be buying less later on? Or is this mainly just going to supercharge this overall cycle as it gets going?
And Scott, I'll add, and I just want to just say thank you guys for the questions. Lots of online questions. We got 1,600 people on Twitter, got a ton on YouTube, guys. Ethan, just on the back of that is, yes, so gold purchases by central banks. Do you see this as something, a temporary trend or a longer term shift in the market?
Exactly.
But great questions all around. Go ahead.
Good questions all around. And I'm going to pick on my poor European counterparts here for a second, because I said to Lee the other day, I said, when the central banks were selling in the 90s, that made the bottom. If the central banks are buying, is that going to make the top? And his answer to me is, he said, when the European central banks buy, that might make the top. but right now, when it's the Chinese, and it's it's Singapore, and it's Brazil, and it's South Africa, and it's Poland, of all places, has been buying a lot of gold. No one can really figure that one out. This is a different type of gold central bank buying. We've never seen this before. Frankly. And what I would say about that is I think it is sustained. So right now in the last 2 years, and this helps to explain a little bit why the gold shares have really underperformed. Over the last 2 years, we've been in a rate hike cycle. Real rates have been rising in the US. And the Western investor has really been conditioned, and I say investor / speculator, has really been conditioned to sell gold and puke gold when real rates go up. And they have. You look at the holdings of the GLD, you look at the commitment of futures reports, everything like that. The last 2 years, gold's been going up, but the Western person has been selling. And they've also been selling their gold shares because, why on earth would you sell your gold and keep your gold shares, right? If you're conditioned to just fade the move on the whole rising rates, you're just going to sell everything, right? And that's what's been happening. 750 tons approximately has gone out of the West through the GLD and these other various ETFs and the commitment of traders. On the flip side of that, the central banks have been buying like 1,000 tons. And so they've had to bid 250 tons away from other physical holders. And they obviously had to use price to do that. And so you have a really high price on the gold price. But what do central banks not buy? They don't buy gold shares, right? They only buy gold bullion. And so that's why you have this massive disconnect that developed between the gold share prices and the gold stocks. And to me, that makes gold shares a really, really attractive investment here. I think that they represent really deep value. I think some of these companies that are on the Lassonde curve right about to start production are particularly mispriced. The Lassonde curve is always there, but it seems like it's there on steroids today. And for those of your viewers that might not know that, it's this idea that you make a discovery, your valuation goes way up, then you decide to build the mine. As you're making the discovery and drilling more holes, you can only by definition have good news. Because if it's bad news, you just don't release it. Then once you decide to build the mine, all that can happen is bad news because you're not going to change the scale or scope because that messes up your permitting. The only thing that can happen is delays and cost overruns. Or at best, you meet your goals, which A, never happens, and B, then you're just kind of, your table stakes a little bit. And then as you get through that build and everyone knows all this equity has to come and everyone knows all this dilution and whatever, once you get to the end of that, the stock then starts to look forward to cash flows and prices and stock valuations move higher. Now it's dumb because any speculator should be able to look back and say, well, wait a second, if I know it's going to be higher later, why don't I just buy it now instead of worrying about this? But it follows this roller coaster. And as of today, I find that that's where the biggest disconnect is, are on these high quality, single 2, 3, 4 asset companies, but something that's kind of stuck in that Lassonde curve valley. And I think that it's going to be a really sustainable move in gold, the central bank buying. And the reason that I think that, and this might sound a little outlandish, but you kind of bear with me for a second.
Okay.
We're in the right neighborhood for a major monetary shift. And what do I mean by that? Well, we go back, 150 years or so, and we look at these huge cycles of commodities relative to other financial assets. And they really map out really nicely. It happened in 1929, 1968, 69, 1999, again in 2020. These were all the low points where commodities had never been cheaper relative to financial assets. And every time, first of all, commodities entered into a bull market, because what happens when commodities are cheap, investors, walk away. Kudos to you guys for starting an investor conference in the midst of that, but you probably didn't have very many people tuning in at the beginning because nobody cares.
We definitely didn't have 1,600 live.
There you go. People liquidate their positions and say, a gold mine is nothing more than a liar standing over a hole, and oil and gas companies are all snake oil salesmen. And then that leads to a supply response, and you enter into a new bull market. That's all well and good, but those dates, 29, 68, 99, all corresponded to within 12 months of a major shift in the global monetary system. In 1928, we were trying to go back on the traditional gold standard. After World War I, Britain suspended. They wanted to go back on. The U.S. agreed to devalue the dollar. We printed money, QE, first instance of QE, to try to prop up the pound so it could hook back onto gold at the pre-war exchange rate. Never could get there. Winston Churchill was the chancellor of the exchequer at the time. He was talked into it. He later went on to say it was his biggest regret in his life was trying to get Britain back on the gold standard. So that was the end, the official swan song and death knell of the classical gold standard. It caused the Great Depression in a lot of ways. The second was 1968. Johnson, wasn't Nixon, it was Johnson, changed the law that said you no longer had to back the dollar by gold. Nixon was the one who had to shut the gold window because once he made that change, everyone had to run on the bank and everyone went to convert into gold, notably the French. And by 71, they had no gold left. So they had to close less. So they had to close the window. And in 99, you had the Asian currency crisis where all these countries pegged their currencies to the dollar at a below par rate to be able to spur their exports. And next thing you know, $7+ trillion of treasuries go east. So that one we don't talk about yet. It's new in the grand scheme of monetary history, but that was a really big shift. It really defined the early 2000s and 2010s. So we're in the right ballpark for monetary regime changes in the sense that when financial assets get this cheap or this expensive relative to real assets, we've always had a monetary shift. And it's because I think when the price of everything gets cheap, all the raw materials, the central banks have more latitude. They can run looser longer, and they end up blowing themselves up. So since 2018, we've been saying, look, watch out for a change in how we conduct monetary systems. And now I think we're beginning to see it, with China looking to trade commodities outside of the dollar, with Brazil agreeing to do it, with Singapore as the trading hub in the center of it. France has actually sold LNG to China priced in renminbi. It's happening. And the question is then, if you're going to get all this trade in renminbi, and if you're Brazil and you're going to accumulate all this renminbi, what the hell do you do with it? Because US dollars are nice. You can go and buy a flat in Belgravia. You can go and buy a villa in the Côte d'Azur, but you don't really need anything in Chengdu or outside of Beijing if you're a Brazilian, iron ore magnet. So what are you going to do? And it seems as though the mechanism, as of right now anyway, is that you'll be allowed to change your renminbi back to gold in the Shanghai Gold Exchange, the International Gold Exchange. So people say, well, is that a new gold standard? You're saying gold's coming back? No, a gold standard has gold in the middle and all these paper currencies as proxies for gold. This system seems to have the renminbi in the middle, the ultimate paper currency, not convertible into anything, not even convertible into other currencies. And then gold helps to settle the trade imbalances. But it doesn't mean that gold will be monetized.
It's the transactional fluid around it.
I think so. That seems to be how it's going these days. Look, these are sort of low probability, really high impact events, and people have been talking about them for many, many years. However, there's been no evidence that anyone had any interest in moving away from the dollar. So, people talked, okay, the U.S. is, running these huge deficits. The U.S. is, retreating from the world stage. The U.S. has political gridlock and debt ceilings. But when Australia sold coal to China, it was in dollars. It wasn't in Aussie dollars. It wasn't in renminbi. That's starting to change now, though. So all those criticisms are still intact of the U.S., but what we're starting to see is actual evidence that it's changing. So watch this space. Gold is being accumulated by all of the central banks that are involved in that currency block.
Yeah,
it's telling you something.
Just to add to that incredible history lesson, guys. Like, if you guys are following on YouTube, give it the like. This is a history masterclass. So Adam, just on one point on with respect to the war aspect right now, like this is all in absence of already things moving, and now we have war on several fronts. Does that just accelerate this situation, like the bifurcation of the world?
I think so. I think that war, unfortunately, is horribly inflationary. I mean, it's horribly violent, obviously, as well. But it's very inflationary. It balkanizes supply chains, and so it increases overall demand. It's also, really resource intensive, and I'm sure you've heard Robert Friedland gives a really good talk about, how much copper goes into all of these munitions, and he says very, very, in a very persuasive way, says, and we don't recycle any of that copper afterwards, after it goes into these howitzer shells or whatever. And the truth of the matter is that, wars historically have been very inflationary. They also, in this current environment where the US dollar is the undisputed reserve currency of the world. And still the vast majority of international trade is all conducted in dollars. And where the US has shown a willingness to what they call weaponize the dollar, or effectively use the dollar to coerce bad actor states into behaving the way the U.S. wants. And I'm not here to say whether that's a good idea or bad idea, but it is certainly leading several countries, I would say on the margin at least, to potentially diversify some of their reserves into things that might be immune from that. And so I think that in all those worlds, gold has additional attractiveness to governments and to nations. And I don't think it's a coincidence that you're seeing the central banks buying on the back of that.
Now, I just want to ask you quickly. So you're very bullish on gold equities. Do you have an opinion on silver? Does silver play a role here? And we asked some silver producers about the impact on renewables. Is that kind of a supercharging aspect to a typical silver cycle?
Yeah, look, so silver, it has historically always been kind of the high octane gold. There's always this rumor that silver outperforms gold, and we heard it again. Shawn was mentioning it in the last presentation as well. What we actually found out is that that's like kind of true, but kind of not true. Silver does tend to lag gold for a long, long time. And all the silver guys, bemoan and gnash their teeth and walk around. And then it stages this like unbelievable catch-up rally. So that in the entire move, it maybe outperforms gold. And everyone certainly remembers it because it happens in a hurry. But it tends to be a little bit later cycle. It actually tends to kind of signal at least a medium-term correction in gold and in silver for that matter. And that was certainly true this time. The last time that silver spiked was when the Reddit crowd all got involved in 21 or whatever. And, that was within months of the top in both gold and silver. And then they've done nothing until the recent move higher. I think that we like silver. I think that we, prefer gold here for the earlier part of this cycle, but we have some silver investments as well. Will renewables be a huge push to silver? I mean, they definitely could. Historically, I guess a pessimist might say, yeah, but you've given up a lot of other industrial uses for silver. Like the film market is gone, but you're getting solar back. So you have to kind of net out some of those numbers. But yeah, I think that silver obviously has a key role to play in energy demand in general, and then to the extent that we have an energy transition, which you probably know we're a little bit more critical of some of those energy transition numbers that are being bandied about.
Adam, great compliment. Man, we've covered so much space here. Adam, this is fantastic. So just to recap, we're still early innings in this gold bull market, right? We're not. This is not the seventh inning stretch by any means.
No, not at all. I mean, look, there's been no participation. Nobody's buying gold stocks. When I used to go to investment conferences several years ago, and they asked me to speak, I would talk about why I thought that oil and gas was entering into a bull market, and people would almost lose their lunch when I would talk that way, and they'd get the hook to pull me off the stage from the side, and uranium, forget about it, right? So now, if I went and I talked about oil and gas, if I talked about uranium, people would be sitting there taking notes. I don't know to what extent they're investing. The flows into the industry don't seem to suggest that they're putting a lot of money there, but they're at least intrigued. And then if they say, well, what else can you tell me? What's new? What are you really excited about? I say, well, let me tell you about these junior and intermediate gold development companies. It's like I see that look in their eye, similar to oil and gas in 2018 and 19. So people have no interest in this stuff. Eric Sprott buys gold companies, and some of your listeners buy gold companies, and I buy gold companies, and John Hathaway and Doug at Tocqueville Sprott buy gold companies, but nobody else, no generalist is buying gold stocks.
Yeah, that's right.
Yeah, we see that in flows anyway. Like ETFs are one useful indicator.
Yeah, totally.
Adam, thank you very much.
We're very early innings. It'll go for a long time.
Yeah, we're still early in this. Adam, thank you so much. We'll see you at the next one. Appreciate it.
Yeah.
Adam Rozencwajg.
GNR.
Thank you, guys.
Adam.
Bye.
All right, everyone, the train keeps rolling. We're going to come back in one quick minute. We're going to have another gold producer that's in West Africa, in a very interesting part of the world. It's always great to talk to these guys who are exploring outside, Golden Triangle, amazing area. Maybe there's a new Golden Triangle to be found in Africa. So we'll be right back. Don't go anywhere. All right, everyone. Hard Money is back. Gold, silver, Bitcoin. We're having a conversation on gold. We're joined by Paul Sarjeant. He's Chief Operating Officer of Kobo Resources. Paul, welcome to Hard Money.
Hey, great to being part of this conference, guys. It's an exciting time to be in the junior mining space, I think, and your last presenter certainly supported that argument quite well.
No, for sure. It was a nice setup, like in terms of, we're still so early innings. People haven't woken up to the opportunity in explorers and small mid cap gold and silver stocks. So it's a great time, and you guys fit that bill perfectly. I'll let Scott lead.
All right.
Yeah. So Paul, I just want to kick things off. Could you give us a brief overview of Kobo's assets, where you operate, and I'm most interested in why you chose to join a company exploring West Africa over other typical places we see North America, South America, Australia. That'd be great.
Yeah, sure. Basically, actually, I didn't join the company. We actually created the company specifically for the purpose of what we're doing. So I think that's a good distinguishing factor. But yeah, we created the company back in 2015, and we built it basically on what we think is a very compelling story in West Africa. Côte d'Ivoire is sort of the poor brother of that part of the world. It's seen very, very little exploration historically. And when I went over there in 2016 initially with my partner, we couldn't believe what we were seeing in terms of available ground. Our key project, our Kossou Gold project, is contiguous with the Ore mine that's operated by Perseus Mining. And I have to say, in all the years I've been in the industry, I really don't think I've ever seen a situation where you could go and basically stake open ground on right beside an upcoming mine. So, Côte d'Ivoire is a very intriguing place. They just updated their mining code back in 2015, and I think you can see the results of that. Back in 2017, they only produced about 25 tons of gold, but the 2022 numbers, and I don't have the 2023s in front of me here, but the 2022 numbers, they produced almost 50 tons of gold. So you've seen a huge influx of projects and people coming into the country, and I think it's very exciting. So, for us, we've got 2 research permits, we've got 3 pending permits. As I said before, our primary project is our Kossou Gold project, which is located just about 40 kilometers northwest of the capital of Yamoussoukro in the country. So we've got fantastic infrastructure. Again, we've got a mine next door, which we think really gives us a huge advantage over a lot of junior mining companies in the space. So that's really what it is. Why we're in Côte d'Ivoire. Again, it's a good operating country, and I think there's just tremendous opportunity for junior explorers in that part of the world at this moment.
That's great. I definitely do want to dig in more on understanding the country where you operate, because some people might not be as familiar with it as places closer to home. But first, I just wanted to start with, so the company has been public since March of last year, not as long as some of these other people we've had on here, but you've accomplished a lot. So I just wanted to hear, could you walk us through what you guys have accomplished to date since you've been a public company?
So the company's been around since 2015, but we just went public with a listing March of last year. We raised about $4.8 million. And since that time, you know, what our commitment to our shareholders is that we were going to be aggressive on the project. And so we did over 5,500 meters of trenching. We drilled almost 6,000 meters of RC drilling on the project. And we really attacked hard sort of our three main targets in that time frame. So it's been a very, very busy year for us. I think the shareholders are rewarding us. Last summer, we had some warrants come up, and we were able to convert all $1.3 million of those warrants into the treasury. So I think the current shareholder base has been quite happy. But yeah, what you're seeing on the screen there, we've got sort of three distinct zones. Our road cut zone, which is our initial discovery. We have what we call our Jagger zone. And then we have the Katy zone, which is a zone that we're just starting to develop now. The beauty of this is our location. We're very close to an operating mine. These targets are all very strong, very large geochem targets. And we've proven, we've proven all of them really through trenching and some drilling, that these are all substantial targets that are well over a kilometer in size and have some very attractive grades and widths to this date in terms of what we've done. So, like for instance, on the Jagger zone, sort of our initial trenching on there, we got 29 meters of almost 6.5 grams per ton, and up with some RC drilling on that. And one of our better results there was 19 meters at over 2 grams per ton. So very attractive numbers. Again, big target there. The road cut zone, similar situation. 33 meters of almost just over 4.5 grams per ton in trenching. And we followed that up with some pretty significant drill results where we got over 13 meters at 2 grams. And there were some sort of higher grade zones within that as well. So we're definitely showing we've got width, we've got size, and we've got good grade. And the last one really is what we call our Katy zone. We're just developing that today. We've never drilled it. In fact, we just started a drilling program. That's underway as we speak, and we're going to put our first drill holes onto that. But again, tremendous surface results. We got 11 meters at over 5 grams per ton, and within that, there was a 4-meter section that was almost 13 grams per ton. So, these are economic grades and widths anywhere in the world. And so our goal right now is to drill the heck out of this thing over the next couple of years and see what kind of mineable ounces we can develop on the property.
Great. Now, I do want to move back to Cote d'Ivoire, kind of understand that country a little bit. So I've noticed that the country is more stable than you would expect, and the politics and the business environment, according to, there's a bunch of good IMF data out there. It's improving much quicker than neighboring countries. Can you tell us what's driving this? And you've been on the ground recently.
Yeah, I mean, I think what's driving this, they introduced a new mining code back in 2014, and I think that really kicked things off. It really brought them to par with a lot of their neighbors in West Africa. And again, the fact that it's been underexplored because that mining code was not very, positive at the time. That's where the opportunity exists. So you're seeing a huge increase in the number of operators there. I mean, we've gone from, I think there were 4 or 5 mines back in 2015. The expectation is there's going to be probably 10 mines coming on stream by next year. That's all happened in the last 5 or 6, 7, 8 years. So I mean that's a direct, I think, response, to that new mining code. And I'll give the government a lot of credit. They went out to make mining their second GDP driver, and I think they're well on the way to getting to that point. So yeah, it's a good country. You can operate in there. We feel very safe. I mean, we've been going over there for, since 2015, and we've never ever had an issue over there. It doesn't have some of the baggage that you're seeing now in Mali and Burkina Faso. And I think you're actually seeing a lot of operators exiting those countries and coming into Cote d'Ivoire as we speak.
Great. That's very helpful. I'm just curious, has there been any recent deal making in the country or in the region that's worth noting? I mean, are the big guys starting to look around for more ounces, or is it still kind of early?
Well, I think it's still early, but you're starting to see that. I mean, there's been a couple of big deals in the last few years. Percy has had a piece in Montage. The Freeland Group just put I think 30 million or more into Montage Gold and their Kone project, which is a sort of one of the up and coming mines that I mentioned earlier. There's been a few other mergers. Allied Gold has taken a huge position in Cote d'Ivoire as well. But you're seeing, operators like Barrick, again, I mentioned Allied Endeavor, Sentiment is in there doing exploration work. Our neighbors, Perseus Mining, again, Montage Gold. And we know other groups like, Newmont and B2 Gold are in there as well at the moment. So yeah, I think you're seeing more of these bigger names coming in. And really, there aren't a lot of juniors in there. And I think, again, that's where I think we can take advantage as a junior. There's a few juniors operating, but the junior market in Cote d'Ivoire is still relatively untested. And so there's tons of opportunity there for us. And we hope to exploit that over the next couple of years, just, on top of the project they're working on right now.
Excellent. I'm very curious what it's like dealing with the government in emerging markets versus a place like Canada and the US. I mean, are there less touch points on a yearly basis, more touch points? What's it like on the ground there?
Again, I would give them full marks. They've really been helpful to us. I mean, to get our concession, our Kasuh Gold concession, we actually went to the government and petitioned them to change the designation of the area so that we could stake it with what we call a major research permit. It was previously just laid out to be an alluvial gold mining area. So we were able to negotiate with the government. It took us, 6-9 months to do that, but it was, constantly being on their doorstep and speaking with them. We ended up getting the concession granted to us. And since then, operating in country is really very easy. It's actually quite pleasant being in a country where they're actually promoting the mining industry. So, getting, you don't need permits to drill necessarily. There's relationships in place with the agriculture ministry and the mining ministry, so that if you work in an area where somebody might have had a small plot of, tomatoes or something like that, there's compensation that you pay. But really, it's very quick to be able to get your drills in there. It's very quick to be able to get the work done. And so we've been very, very pleased with the operating environment in Cote d'Ivoire. And I will say, the one thing that we do quite a bit of is we do keep in touch with the government fairly regularly. So my partner, Ted Goslin, he's a lawyer. So, one of the things he does consistently is we're always touching with the mines ministry, either the assistant mines minister, or we've actually spoken to the mines minister on a number of occasions as well. And, I think it's just useful to do that. And I think you've probably got greater access to those guys in this country than you would necessarily in Canada or the US for that matter. So yeah, it's a good operating environment, and we've had, honestly, zero issues at this point in time.
Oh, that's great to hear. Yeah. And it's funny, you said 6 to 9 months like it was a long time, but we know in the West that can be a blink of an eye and not much can get done. So that sounds pretty good to me, actually.
Yeah, I mean, just, I've been involved in Nevada and Utah in some projects recently, and, it takes you a year just to get a road permitted to get your drill on site. So, we can do all that and more, within the time. I mean, again, like we started drilling, and we listed in March of last year. Our drills were turning in July. We've been trenching consistently through the time frame. I mean, there's really no barrier to work at this point in time.
We spoke about this offline. I think it's useful for people to hear. You said, how quickly can you turn assays around after you drill versus like what it might take in Canada?
Yeah, so that's another huge advantage I think that is present in Cote d'Ivoire specifically at the moment. Again, I think with all the big labs, so SGS, Bureau Veritas, MSA Labs, all those guys, they've all opened up brand new facilities or relatively brand new facilities in Yamoussoukro. So Yamoussoukro, again, is the capital. Our project is only 40 kilometers away from the capital itself, and we're connected by paved roads all the way. So again, infrastructure is fantastic for us. We've been able to get, on our drill program back in July, we were getting 3 to 4 day turnaround on our assay results. And we've got a contract with one of the assay groups now to do the same thing. And we're expecting to get 4 to 5 day turnaround on our assay results. So I know guys in Nevada that have been waiting 3 months for assays. I mean, if you're even more remote in Canada, it's, good luck kind of thing, right? So it's a huge advantage to us. I mean, and this is an accredited lab. I mean, these are all the ones that you would use anywhere in the world. So these are all top quality labs. And, that's going to allow us to really effectively manage our exploration program. So if we're drilling into one of our targets and we're getting, as good or better numbers than we were expecting, we're going to know that very, very quickly, which means we can do more drilling in that area if we choose to. If, on the other hand, we're not getting the results we want, we're not going to be wasting a bunch of drill holes drilling into something and hoping that we're going to get the results. We'll know what the results are going to be. So it's going to allow us to really manage our program, I think, extremely effectively. And that obviously means cost savings, which obviously benefits our shareholders.
Yeah, that's a great differentiator that people should realize about operating in some of these emerging jurisdictions. You can just make decisions faster and be more efficient.
Yeah, absolutely.
Now, I just wanted to ask kind of what's your go forward plan? What are Kobo's exploration plans for this year, the medium term strategy going forward? I mean, do you have a rough guess when releasing a resource estimate of some kind would make sense for you? You know, it's always a strategic decision. Maybe you could take us through what's next.
Great question. For us, we're focused on drilling and developing these 3 targets. So that's going to be our goal in the short term. As I mentioned, we just initiated about a 4,000 to 5,000 meter diamond drilling program. So we're just underway on that on the property right now. The goal is to have that done in the next couple of months. At that point, you know, our plan would be then to come back in with probably a couple of drills and do another 10 to 12,000 meters this year. That's all, of course, dependent on available capital. But our short-term goal over the next 2 years really is to drill this thing off, try to define mineable open pit ounces. We think our strategy kind of aligns well with our neighbor. You know, the Perseus mine next door is a very good mine, but they are depleting their resources very, very quickly on that. And if you go look at their documentation, you'll see exactly what I'm talking about. But you know, if we can get this thing drilled off in the next couple of years, I would think that our first mineral resource estimate would likely be, you know, in early 2026. We're really in no rush to put that out because, you know, I think our job is just to as quick as possible. And so, you know, for us to put out an interim one and then, you know, 6-8 months later do another one, I just don't think that makes sense, and it's expensive, and it sort of takes away from your really focused work effort. So, you know, that's my position on this. We'll drill, we'll build ounces, we'll understand our models, and you know, we'll see where that takes us in the next 18 to 24 months, kind of thing.
You're in that sweet spot of the Lassonde curve. It's a nice place to be. So,
Paul, thank you so much. That was a fantastic
exactly
overview.
right. Yeah, you're right. That's exactly what we're trying to exploit, that Lassonde curve. And you know, again, we think we've got a huge opportunity here. We think, given our situation with infrastructure, you know, with the neighbor next door probably wanting ounces, you know, we think it's a top quality project. And yeah, I've been around for 35 plus years, and I think this is one of the better ones I've seen in a long, long time. That's for sure.
That's great. Certainly has potential.
Thank you very much, Paul. Paul Sarjeant from Kobo Resources, ticker KRI on TSX feed. Paul, thank you so much.
Thank you, Paul.
My pleasure, guys. Great being part of this conference. Thanks very much.
Appreciate it. Thank you.
Take care.
All right, cheers.
All right, everyone. Hard money. Keep on rolling. We hope you've gotten a lot of value out of this. We know we always do. We're asking the questions that we want to know when we're putting together funds, figuring out what assets to purchase. So that's how we structure this thing. We're going to take a very quick break, and we'll be right back with another operator, First Nordic Metals. Don't go anywhere. Welcome back, everyone. Grizzle Hard Money. We're very happy to be joined by Taj Singh. He's CEO and director of First Nordic Metals. Taj, welcome to the show.
Thanks for having us.
Taj, thank you for joining us.
So Taj, I was looking at your bio. You've had an impressive career in the mining industry. You built a silver company from scratch, and you helped another gold company get taken out by Newmont, the largest gold producer in the world, among other things you've done. So, given your experience, I want to start off by asking your current thoughts on gold. Are we clearly in a bull market? And if so, what inning does it feel like we're in? And how do the current fundamentals compare to past runs you've seen?
Yeah, I think we definitely are. I'm usually cautious on this one, but I mean everything is pointing to a real run here. I know we've had some head fakes over the past few years, but inflation, interest rates haven't even come down yet, and gold's surging. Inflation's still hot. Gold's still moving. So I think really when interest rates come down later this year is what they're saying. That's when you're going to see some real movement, and we've already had 15-20% increase year to date on the gold price. And in terms of the fundamentals, I think, listen, it's in terms of what inning we're in, actually, I think we're early days. I think we're first, second inning. It's just starting here. I think it's a 10-year bull run. In terms of the fundamentals, you've got global central banks buying, political and economic uncertainty on top of that. And again, if rates come down, I think it's the perfect kind of ingredients to really see a push. You're talking about major banks talking about $2,700 gold by year end, $3,000 gold. I think it's just a matter of time now.
Yeah, for anyone listening and taking the pulse of this conference, we're at a 100% hit rate on that we're in a bull market, and not all the investors you've heard from, they're not gold only investors. They invest in lots of things, so that's a pretty good sentiment check that the fundamentals are there and sentiment is also there as well. So Taj, tell us a bit about First Nordic. I'd love an overview of the assets, and you recently completed a buyout of Goldline Resources, where you were the CEO. You're now the new CEO of First Nordic. That's quite a stamp of approval there. What was the rationale for the combination?
Yeah, it was a really natural kind of merger. I mean, effectively, it was a takeout. Barsley took out Goldline, but the Goldline management kind of took over, kept on some of the Barsley board members, and it effectively was a merger. And yes, it was such a natural thing to do. I think I came into this seat September 2023 and said, hopefully in about a year or so or 18 months, let's do something with Barsley. And a couple of months later, through networks we have, and I knew the management running Barsley, Gary Cope. We talked and we said, listen, it's time to get this thing bigger. It's a natural fit because the properties are contiguous to each other. The teams can work together. We've already got a presence there in terms of working there. It made all the sense in the world. And so we put that together really quickly, moved forward. And I think now you've got a company that's larger, more liquid. And to be honest, it's Barsley Minerals owned about 10 to 15 kilometers of strike on this gold line belt in north central Sweden. We owned the 40 kilometers, 100%. We own the 40 kilometers to the north, 40, 50 kilometers to the south. Now all of a sudden we own the entire 100 plus kilometer strike. Right smack in the dab in the middle is 2.5 million ounces in a JV with Agnico. But we 100% own the rest of the strike extension. So hopefully there's Barsley 2, Barsley 3 we're going to find. But it just made all the sense in the world that we now control the entire belt. On top of that, we have we own a Finnish greenstone belt, similar geology. It's about 15,000 hectares, so still very sizable, underexplored. It was drilled by Agnico. We acquired it from Agnico. Current resource is about 300,000, a little over 300,000 ounces. Has seen very limited drilling, but 300,000 ounces or so, 4 or 5 gram per ton. So very good grade just below surface. That's still open at depth along strike. So we own two greenstone belts. Our focus is Scandinavia, so it's Sweden and Finland. And with gold moving here, I think we're in a really good position here because we have kind of late stage resource development style projects and the exploration system, considering we own the whole belt that's really not been explored.
Great. So you mentioned you have multiple projects in Sweden and one in Finland. There are varying degrees of exploration. Which of the assets are most compelling to you and why? And also, how do you plan to grow these assets?
Listen, the one we're really focusing on is the Swedish belt, and I kind of consider it all as one series of projects. It's an entire portfolio because our success at one affects the other, definitely. And our knowledge and our expertise in the area of the geology will continue to kind of help everything around it. So that gold line belt is our real focus. I think at Barsily, that deposit has room to grow. But I think the real low-hanging fruit, honestly, is a discovery we made about 40 kilometers north of Barsily. We own 100% of it. It's called the Powbacken Project. About 23, 24 meters just below surface of 2.5 grams per ton. Core looks very similar to the early days of Barsily. The geochemical footprint is actually larger than Barsily. So like that one to me is very, very exciting. And a big part of the reason I joined Gold Line was that deposit. And I think that deposit has real legs. To the north of Barsily, earlier stage projects, so about 30, 40 kilometers north of Barsily, again, a very similar size kind of geochemical footprint, a project called Storyukten. But that, again, could be something extremely similar to what we're seeing at Powbacken, and then hopefully even Barsily. So our focus really is that Swedish belt. We have the Finnish belt. As gold moves up and we can continue to capitalize ourselves, we will continue to work on that because there's an existing resource, but our focus right now is Sweden.
Great. Now, I do want to talk about this interesting JV you have with Agnico Eagle. For people who don't know, they're one of the largest gold miners in the world. They've been around a long time. Like, they're a juggernaut in the industry.
That's royalty. That's a royalty JV.
Yeah, you
right
want a
there,
JV.
Todd.
That's the JV. Hats off to you.
Yeah, that's a track record speaking right there.
Yeah. But I want to hear more about the JV. I mean, how did it come about? And can you just help people understand what are the mechanics of how you're working with them on the project?
Yeah, no, listen, they're just flat out, ask anyone, they're one of the best miners in the world. We're super happy to be working with them. So the JV came about in about 2015. Agnico entered into a joint venture with Barsily Minerals, in which Barsily was fully carried. So I want to point that out. Any work at the Barsily project is fully carried, no cost to us. So it continues to get de-risked and advanced and progressed at no cost to us up to the point they put a pre-feasibility study out. And then in that case, we'd go to a 70-30 relationship, and we'll have to put our own pro ratas in moving forward. But up until that point, fully carried. And to be honest, if Agnico takes it to a pre-feas anyway, where they're going, and it's just a matter of time. But they came in just after, kind of a little bit after the discovery with some additional drilling. They've spent about 65 million US already on it, which is probably less than half of our market cap. And if you include land acquisitions that Barsily did and all that, you're talking close to 100 mil has been put in here. So it's I think look at the market cap now and the potential value we can add and what's already been spent, and you'll see it's a pretty attractive investment opportunity to look at for First Nordic.
For sure.
Do you have any back of the envelope on what you think? So you're at about Barsily's at about 2.4 million ounces indicated and inferred. What's the resource target where you think it would make a lot of sense to take it to development? Is there like a bogey that the JV partners have in mind?
Listen, when I did my due diligence, I assumed there was no growth. I'll tell you about what I think the growth is, but I assume there's no growth. This is the deposit. It's not going to grow anymore. And we did our own. We took all the drill hole data, made our own resource as part of the DD, made our own kind of internal mine plan, a detailed mine plan. And it's a mine, guys. There could be nothing else found. The thing is going to make a lot of money at $1,600, $1,700, $1,800 gold. It's going to make a lot of money. I can only imagine what it's going to make in the 2000s. What's the actual potential size of this thing? Listen, based on discussions and with Agnico's geologists who've been in the area for 10, 15 years, who've worked at other projects in Europe, including Rupert, including other European projects in this kind of region. Just at depth alone, guys, and along strike, filling in some areas along the known strike, you're probably looking at 4.5 to 5 of serious potential, which is extremely exciting. I think they've really only scratched the surface here, and you put some real drills on this thing, it's going to be a monster. And imagine you can get 4 or 5 here sitting at Barsily. You go find another 1 or 2 Barsilys on the belt, which we now own. You're talking about, a potential down the road for 8-10 million ounce kind of camp. You've built a camp that in Ontario or Quebec you'd have about 10 or 12 companies covering this entire strike. And here it's just us. So it's really exciting.
Fantastic.
Now, I'm curious to hear a little bit more about the history of gold exploration in Sweden and the Gold Line mineral belt. Is there a geologic comparison to a region in Canada that, people following us, they may know the Canadian market better? Is there one you could compare it to geology-wise?
Yeah, no, definitely. I alluded to it in the previous question, but it's a greenstone belt. That's the main host rock. There are some slight differences but in terms of kind of ages and type of host rock, very similar to the greenstone belts we see in northern Ontario, northern Quebec. Also similar to the greenstone belts we see in Africa, which are obviously a part of what we usually now see in the greenstone belts in Brazil. So these greenstone belts are known for being very prolific in terms of high grade gold, other metals obviously as well. But yeah, that's a very close comparison. And in fact, a lot of times on these Scandinavian projects, they'll use similar kinds of costs, and they'll use the database of things in Ontario or Quebec to kind of start figuring out what the operation might look like. So no, there's and if you go there to the operation, it looks like, you're in Northern Ontario, you're in Timmins or Kirkland Lake, or that's what it looks like. And even like I said, the geology is very similar to.
Now, I want to talk about the regulatory and operating environment too. How does that compare to other European countries and Canada? I mean, are operating costs the same as in North America? Does the government want more mining in the country? Take us through that.
Yeah, and I forgot to answer part of your question on the other one, and it kind of relates to this. Is like Sweden is a mining country through and through.
Yeah.
The largest copper mines in the Middle Ages, iron ore mines, all from Sweden. Sweden's still the largest miner of iron ore and one of the largest, if not the largest, of base metals. So in total, it is the largest by output mining country in Europe. And listen, what kind of happened is exploration was restricted to foreign-owned companies up until like the EU. So kind of, once we start getting into the mid 90s, late 90s, it opened up, and exploration really only started then. So this is like, you've got a greenstone belt that's similar to what the prolific greenstone belts of, like I said, in northern Canada, Quebec, and Ontario. And it just hasn't been explored. And it's also, there's overburden, right? There's like anywhere from 5 to 10 meters of glacial till on this stuff. So you got to do a little bit more work in terms of kind of doing what we call base of till drilling, kind of shallow holes to figure out what's there. But this is an entire belt that just hasn't been explored at all. And a lot of these discoveries you're seeing are blind discoveries. That Powback and discovery we had, we knew the footprint, the general footprint, but we kind of put a blind hole in, and boom, like second hole, we hit we hit something that's very early days to varsity. So that's a really interesting thing for me. And I like, despite what people may think, like it's on right now in Northern Europe for pushing mining. Both Sweden and Finland, it is very much on, move things forward. The cost thing that you bring up was extremely interesting to me. I used to be an analyst at Macquarie. I've done due diligence on obviously hundreds of projects during my career across various jurisdictions, but the costs are just unbelievable, both for exploration and underground, and actual mining, unbelievable costs. And a lot of it's related to low cost power, very low cost power. There's hydropower plants all over the place. They're also just good at doing stuff. Mechanized, efficient mining, getting stuff done. It is unbelievable. Like it probably is. It's easily top quartile costs, both for exploration and for operation, but maybe even top decile. It's unbelievable, and it really shocked me, and I think it's a huge part of the reason why there's going to be a huge push in this region. It's and the other thing is the tax, right? Corporate tax rates like 18 to 21%. Very favorable tax rates for companies too, moving forward into eventual operations. So a lot of big advantages here for business.
That's fascinating information. Thank you for that. Now, maybe just want to end things off with what are the most important catalysts for First Nordic as we watch your operations move along over the next, say, 1 to 2 years?
Yeah, listen, we're really excited about working on the Powback and Discovery, which I talked about. That'll be our focus. We've also got the Northern project, which is maybe a season or two behind the Powback and Discovery. We've already identified a big footprint there. We'll do some geophysics and get some bot drilling, base of till drilling, some lines done, and get ready to drill that probably late this year or early 2025. But our main focus for immediate kind of diamond drilling program will be Powback. Agnico will be continuing to move on there in the next few days or so. We'll be putting out a press release. Agnico will be starting work at Barsili, continuing to drill there. And then a big thing, the main goal here, guys, is our aim is to acquire the Barsili project. Either Agnico moves it forward or we take it. But we do want it. We think we'd be a great operator for it, and either have Agnico in as an equity partner or a partner at the project level. I think that's a huge catalyst, and I think it just completely finishes off sewing up that belt, which is already almost there anyway. Yeah, I think it'd be fantastic, because you could really start talking about a huge gold camp. So yeah, drilling on our discovery that we've already made, a potential new discovery in the north of Barsili, and then working towards potentially acquiring the rest of the Barsili project from Agnico. Those are, I think, some really main catalysts for us.
Exciting path ahead, Taj. A big thank you for the great overview. That's First Nordic Metals, ticker FNM on the TSXV. Taj, we got lots of we got to follow this story. I really appreciate you joining the Grizzle Hard Money Gold, Silver, Bitcoin Conference.
Thank you, Taj.
Thank you guys both so much for having us.
Appreciate it. Thank you.
All right, everyone. Hard money. We're not even close to being done, so we're still going. We got some great guests coming up, some ones you might know from social media, and then just some really smart people out there. So don't go anywhere. We're going to take a really quick break, and we're going to be back with a Peruvian gold explorer, producer, cash flow generator. We'll be right back. Hard back, everyone.
Oh man, that's an elegant set right there, man. That's like, whoo.
You need some cigars, some brown liquor. Wow.
Later.
You're putting us in the theme over here. Okay.
Oh, Scott, do the intro, man. We're just like, man,
everyone. He's got the background, but he's got a great company. We're speaking with James Tworek. He's CEO of Element 79 Gold. James, thanks for being on the show.
Thank you, gentlemen. Huge opportunity to be here with all these amazing mining heads and amazing financial heads. Appreciate the opportunity to be part of this.
James, thank you very much. I you need like a nice glass of whiskey there, a cigar.
It may be a little early, but depending where you're watching from in the world, maybe not. So.
Oh,
perhaps a little bit later.
Thank you so much for joining us, Scott. Let's kick in.
Yeah, so you have an interesting project. I'm loving that we have all these projects from all over the world. You get to learn about areas that aren't just BC or Ontario. Can you give us a brief history of Element 79? How did your current asset package come together?
Sure thing, yeah. We ended up acquiring, we went very quickly over about an 18-month stint of M&A, where we started with one property, grew to an overall portfolio of 20, and we've been divesting those for profit. So phase one of income and revenue generation for the company, we've now completed that phase. And through that, June 2022, we acquired a company called Kalapuy Resources, which at the time had 2 assets in it. It's important to state that we acquired this asset for 2 reasons. One is that people first. It was an amazing lineup of global level experienced multi-billion-dollar project managers and operators of mines that had assembled that package. We've divested of one of the two assets, and the main focus is the Lucero asset. This asset was a past-producing mine, and during its heyday of 1989 to 2005, it actually produced a very impressive, I'll say the first stat first, it was the highest grade gold and silver mine in Peru at that time. And it was producing on average 19 grams per ton gold equivalency, which was 14 grams per ton, and tens, if not hundreds of ounces of silver. Just absolutely fantastic. Now, at the time, it was abandoned. It was abandoned from basically the all-in sustaining cost, i.e. the cost to produce one extra ounce, was exceeded by the market price of gold. So the original owner, Buenaventura, abandoned the mine, and the artisanal miners have been working this mine ever since. So 19 years of artisanal production underway. They're restarting right again next month as the rainy season ends. And we have the opportunity to join forces with them and build. It's a really exciting story.
That's great. Great overview there. So I want to talk a little bit more about Lucero. You said it was a previously producing mine. Can you tell us a bit more about the history of that mine?
Sure. Well, it was discovered back in the 1950s, and through three different blocks of or eras of production, it had been producing. Now, I have to stress that we're talking about a total land package of 10,800 hectares. That's 26,000 football fields of land. It's all contiguous at the top of a mountain. Okay. On that land package, we're talking about 74 veins across it. Okay. This is your typical Andean epithermal vein system type project. And all of the past production, to kind of break it down to some simple metrics, of 74, 19 veins have only ever been tapped to look at. All production came from 7 of them. And right now the artisanals are only producing from 3 of them. So there's a huge opportunity for running room, not just on the existing veins, which have over, as we have mapped, about 10 kilometers of underground workings already, 9 to 10 kilometers right now. And there's plenty more for us to continue mapping. But also we're talking about 3 veins. So in the grand scheme of things, as we continue to ramp up production, we have these ones that are, we'll call it the low-hanging fruit to get back in, drill through, prove up resource value, form a mine plan, and build out. But in addition to that, massive amount of running room just on the veins alone. There's also, on such a large land package, as can be expected, there's a large sulfidation target that has never been touched by a drill. But it's a high sulfidation target that very well could prove to be an impressive resource value there. So once we generate revenue with free cash flow, we will be re-entering that, or entering that area, I should say, to then try and prove a resource on that.
Now, I really am interested to talk about that cash flow aspect. But first, I just wanted to learn a little bit more about the team at Element 79. So your team has built junior miners into mid-tier miners, and your team has also worked at both mid and major miners. Can you just tell us a bit more about the team?
Sure. First and foremost, we built a team of gentlemen that have effectively done exactly what you just said. They've worked at smalls to mids and mids and majors. Antonio's our COO, I should say our former COO, now director. He comes from a background of Koch Industries, Freeport McMoran. He and one of your earlier presenters today, Shane Williams, built the Skouries mine at El Dorado. They spent 8 years grinding out, building a mine over there. And then they jumped over. Shane was the COO at Skeena Resources, which at the time, Tony came in as a consultant around the back end, on the backside, and I believe they still have a dozen or so people working at Skeena. They had built that from a $20 million market cap to over $1 billion market cap at its peak. And now Shane had retired after 5 years and jumped over to running West Red Lake Gold, which we've already heard that story today. It's a fantastic story there. As I understand, Tony's consultancy, Mine Plus Group, is plugged in the backside of that operation as well. So once you have a proven model and a proven mixture of the right humans doing the right things with some amazing assets, I would argue that's a recipe for success. And those guys are here too. On top of them, I also want to stress that I have our COO, Kim Kirkland. He spent 22 years working in Peru on global level mining projects, both for, you might recognize Antamina, which is a tech joint venture, one of the major producers for copper in Peru, as well as spent 9 years working as the regional operations manager at Las Bambas. And during that heyday, Las Bambas was Peru's largest copper producer. So mass scale, just totally different from hooking up these racehorses to my apple cart here at Element 79. Such a smaller play, but this time, very different in terms of the resource as well as the profitability aspect. You can make great money working for the big guys, but you don't really make it for yourself. You don't really get a piece of the overall equity pie, and that's what we're here doing, is building this up for our investors, tight share structure, and so on. Well, we can discuss those facts through some other questions of yours.
Sure. Yeah. So I wanted to go back to the cash flow aspect. So you see a path to generating cash flow in the near term from Peru, which is very unique among projects. Can you just tell us a bit about what makes this possible in your view?
Sure thing. As I had mentioned earlier, the artisanal miners are effectively the local mining community around this mine. To give you an idea of scope, 3,000 people, 900 of them form up the mining association called Lomas Doradas, and they work on 6 other mines in the area in addition to this one. But they've been working there for the last 19 years since this mine was shut down from commercial production. And again, it wasn't shut down because it was barren. It was shut down because the operating cost at the time exceeded what it cost to produce 1 more ounce, meaning gold had dipped below, let's say gold hit $700 to $500, and it was costing them $700 to $800 to produce. So obviously the economics are different today with $2,000 plus gold. And I think I remember the soundbite from one of your earlier comments, Scott, that 100% hit rate on the soundbite that we're in a gold bull market right now. So that's exciting. But the reality is that these artisanal miners are still producing today. They're producing at roughly 70 to 100 tons per week, which means that, number one, this is how they're earning their money. And number two, as we go through, we provided the community contracts. We just had a news release on this yesterday. We provided them contracts on Monday where they're voting on Sunday to basically both approve us for a 10-year exploration program. So we have a permit on the social side to pair with our federal permit for ore extraction up to 350 tons per day. And we can do this over the next 10 years. And one hand washing the other, we're also granting them the ability to continue working in a formalized and directly aligned fashion with us, where we are effectively becoming, they are independent as working partners, but we're becoming their wholesale partner. They sell the product to us. So A, they're already selling this product to third parties for profit. B, now they're selling to us. We then bring that to market, and we'll be gaining something in the middle to start generating revenue. And that will help fund some of our operations in a non-dilutive fashion, where we can then bring in the right project finance, think cool, calm, collected, and make the right financing decisions to drill out, prove a resource, and ramp up to the phase 2 of revenue generation, which is walk up 25, 50, 75 tons per day as we start producing from the same mine.
That's a really interesting strategy. So it's good. Thank you for laying that out. That sounds definitely unique in the space. So I wanted to move a little bit to your asset buying and sales strategy. It's been very successful for you. It's been profitable. So can you just talk us through the asset sales strategy in general? I mean, is this an ongoing part of the Element 79 story? Is that what investors should expect along with Peru?
Sure. It was an important facet of revenue and asset generation for the company in the past. And I kind of break the history of the company up into, that was the 1.0 story, and we're now on the 2.0 story, where we're generating revenue on a monthly basis from mining operations. And while it has been important, and we still have several sales underway, the most important of which is Maverick Springs. That was a former key asset that we had effectively bought for approximately $3.2 million, spent about $600,000 in the middle. And then the sale value is 4.4 million Canadian cash and 800,000 Australian dollars worth of shares, or 3.5 million shares of an ASX listed company. Now, the sale of that brings in non-dilutive capital to the balance sheet, and we're expecting that to close in the next month. So somewhere between May and the start of June, we understand the ASX listed company has been, they're expecting to be green lit this month for their listing. And with that, they have to close on the asset. to complete that listing. So I have a high level of confidence that this is all plowing forward. And what that's going to do is both do two things for us. We've been through a consolidation and a massive balance sheet cleanup already. This brings in the capital to finish cleaning up the balance sheet, paying off a mass amount of debt, as well as leaving us with effectively a bit of a war chest. Let's call it. We're expecting somewhere between 700,000 to 900,000 Canadian dollars to be left that we can then use to continue preening and I guess primming and proppering some of our properties, doing some exploration, preparing 43 101s on them, so they themselves can either continue to be explored, joint ventured, or sold, in addition to moving things forward at Lucero.
Wow. Okay. That's very, very helpful background. Can you just tell me what are some of the catalysts on deck for Element 79? You've gone through, you have a lot of things on the go. Maybe just help investors. What should they really focus on over the next 1 to 2 years?
Thank you. Yeah. Continued property sales. As I mentioned, Maverick Springs is live on deck right now in the next month, plus minus, to be sold and have that transaction close. I did mention about the formalization of the agreement between the artisanal miners and ourselves. So getting the both our exploration and exploitation permit approved by the community, as well as the direct alignment for having them effectively start selling the product to us. And on top of that, again, additional additional project sales, as well as this is all happening in the next 90 to 120 days. It's very exciting to see these kind of ramp ups. If you want to talk about the next 2 years, we are expecting to, at Lucero, begin a drilling program between 3,000 to 6,000 meters. With that will help. That should start approximately June to July of this year. We are expecting to be able to prove up a resource value through that, as well as form a PEA from all of the drilling that has been done above ground, underground, through that drilling campaign, as well as everything we've done from all of the historical data aggregation and mapping. So it'll be very helpful, because all of that means formal mine plan, and that means formal ramp up towards commercial production. And as I had spoken before, we expect to crawl before we walk, before we jog, before we run. And that means, start with the artisanal miners production and bring up some production stats directly from volume sales, bulk wholesale. That's happening effectively, I would imagine, revenue to start between May and June of this year. And then start, as we get through some of the drilling, to form a basic mine plan, get ourselves to 25 tons per day, 50, 75, and start walking that up. Our goal is to be, over the next 18 to 24 months, producing at 200 tons per day. This mine was yielding 150 tons per day on average, and yielding between 40 to 50,000 ounces in the past. So it's exciting for us to start ramping up towards those production levels. And I'm very happy if I hit 10,000 ounces at $2,000. I'm very happy if I hit 20,000 ounces. If I ever get to those highest aspirational heights of 40 to 50, I think we're all going to be laughing.
Yeah. Well, James, a fantastic overview of the company. Exciting catalysts ahead. That's Element 79 Gold, ticker ELEM on the TSXV. James, thank you for joining us. Be a part of Hard Money, Gold, Silver, Bitcoin.
Thank you, James.
Thank you, gentlemen.
Thank you.
All right, everyone, Hard Money. We're going to take a very quick break, and then we're back with your favorite commodity investor on Twitter, Tracy Shuchart from Hilltower Resource Advisors. Know her as Shy Girl. Don't go anywhere. Shy Girl's coming right up.
Tracy. Hey, how's it going?
Hi.
Tracy, how are you?
I'm-
A longtime friend of the Grizzle, Tracy Shuchart, Hilltower Resource Advisors. Tracy, thank you so much. You've been with us since day one in various conference scenarios. I think we've literally had you in every conference.
You're a core part of the journey.
Exactly.
And I so appreciate it.
No, really appreciate it. And, I think it's still like, and you know what? I always think of you as the Queen of Silver because Silver is the most unique one because we can have you at a battery metals. We can have you in the hard money. It all kind of works. But Trace, really appreciate you joining us. Thank you. And now, speaking of the Silver Queen, so you've had a long-standing bullish tilt on silver. We've had clearly an incredible start to 2024, the best performing, hard commodity. Could you speak to the macro for silver? And, just really on the demand side. And I think you've got some great data. We've got a chart that's going to come up while you speak. But, I don't think people fully appreciate just all the different legs there are to the silver market on the demand side.
Right. So when we're talking about silver demand, I mean, most people think of silver as kind of the lumped into that precious metal market, and it is. That said, it has industrial purposes as well. And that's why I really like this metal, besides the fact that it's highly underappreciated. But if you look at the demand, you have 45% is literally industrial applications. The next is, physical investment. But I think that's overlooked, that 45% is industrial applications. And what do I mean by industrial applications? Well, that includes medical, but it also, if we're talking about this green transition that everybody is focused on right now, and we seem to be headed full bore forward, then we need to talk about all the silver that's involved in an electrical vehicle. For example, if you think about all the electrical components, they all require silver. That's about quadruple the electrical components that are in an ICE vehicle, not to mention solar panels and wind turbines. And so the demand is there, and I suspect that 45%, this is 2023 information, I suspect that 45% will be even higher over the next decade.
That's it really is. You have these two prongs that happen, and it's just so much more diversified. Now, one challenge, it's putting, obviously demand alone is not enough to give you an idea of where a commodity can go, right? And one, like you've written extensively about it on Twitter, and those guys who don't follow, I think the whole commodity world follows you, but in case someone's in a shell, it's at Shy Girl on Twitter. But you had another great chart just in terms of supply has struggled to keep up with demand. Because we'll pop that chart too up. Could you talk to some of these challenges on the supply front, and maybe just talk to this deficit situation that's there? We can pop the slide up.
Yeah, absolutely. So, what we have seen, obviously, as, supply, silver demand's growing faster than supply. And I think that will get even higher. And you have to understand that, if we look at the mining industry, they've had this kind of the same problems that the oil industry has, and that's lack of CapEx for a very long time. And we also had silver, we kind of had a silver surplus up until 2021. And then the deficits of the last 3 years, plus the Silver Institute just came out with their estimate for 2024 deficit, which is huge, and I'll get into that. But the last 3 years of deficits literally surpass the prior 11 years of excess. So we're headed kind of into dangerous territory. And now when we talk about this, so we had mine production, fell in 2023 by 18 million ounces. It's supposed to fall even farther in 2024. And that contributed to, in 2023, 140 million ounces of a deficit. Now, what the Silver Institute is forecasting is a 265.3 million ounce deficit for 2024, and it kind of gets worse from there on out. And so we have a serious supply issue right now, along with a demand issue that's growing. And so, that makes a very attractive force to me for an investment as an investment standpoint.
Yeah, we just got this graph. Can we pop that graph back up? Yeah, so this is, I thought, was a great graph that you highlighted. Just looking at all the different there's very little green on this graph,
Right?
on this map here, right? So these are all the different regions, and looking at year-on-year change, and this is obviously 2023, but the same sort of trends look like they're spilling over. Is that fair to say, into 2024 from a regional perspective?
Absolutely. And, we haven't placed sanctions on Russian silver, but if we do that, that's going to add even more pressure on the market.
Yeah.
And the one thing I wanted to point out too is we're looking at a forecast of supply and demand, but you've looked at supply. These forecasts have been way wrong on demand. If you just look at like solar panels, which are becoming a bigger and bigger portion, I remember I went back and looked and they were off by like 25% on demand was just that much higher. So that means that demand's gonna be even higher than that chart we were looking at, most likely.
For sure. Yeah. Now, just pivoting, I got to ask, because so that's a great backdrop here on silver. Now, should we continue to view silver as that leverage play on gold? And there's that silver gold ratio, gold silver ratio we can talk about, but then also pivoting to gold. We'll have a image pop up, but maybe why don't we talk to the silver side of that first, Trace? Do we still view that as the leverage play on this gold run?
Well, absolutely. I mean, so if you talk about the gold silver ratio, when the ratio is high, that indicates silver is relatively cheaper to gold. And so right now, it's relatively high, and that probably can go up. And so I think that, I love gold. I do love gold. I think that we are going higher in gold. I think it's in a bull market. I just think that percentage wise, silver's been lagging gold. And so, if that's going to catch up, then, this is a great time to get into this market.
Great.
We heard a great comment from a prior guest about how quickly silver catches up. It lags, but when it goes, it goes. And so that's why you want exposure, because you're not going to really be able to time it.
For sure. And just so pivoting to gold, we've seen incredible demand strength, particularly from China, from both the central bank and consumers themselves. While in the West, we've seen, say, net selling of the GLD ETF, right? It just kind of puts this whole thing into perspective. Do we have like a two-train thing going on? How should we think about that, like just from a demand perspective? And could we see U.S. demand reignite, and what would that ultimately mean for gold?
Well, yeah. I mean, I think you have to put these two in kind of separate categories, right? So when you're talking central bank buying and when you're talking retail buying. Now, the chart that you put up, is of China right now. And what's interesting about China is that retail is buying, but they're buying physical. And they're buying physical right now because the younger generations really see that as a store of wealth right now. The stock market is bouncing now, but has not been doing well. The property sector is in shambles. And so the younger generations are looking to gold right now. And so we've seen a huge increase of retail buying in China, with jewelry, gold coins, et cetera. They actually surpassed India for the first time, which is really interesting. And it says a lot about kind of where the mindset is of people in China. Where are you going to invest? Where's going to be your store of wealth, right? You're like, I'm not going to be in the stock market. I can't be in the property sector. I'm going to buy physical gold. And then, we have, and then to speak to that, obviously, if, retail in the West catches on, that's just going to skyrocket the market. But let's pivot back to central banks right now. And why are we seeing central banks buy, so much gold right now? Well, what's interesting, because I was talking to Grant Williams the other day, and he brought up a really good point. And he said, what happened when the West seized Russian assets? And then also we just enacted legislation to give some of those assets to Ukraine. That effectively rewrote international law. And so you may be an ally of the United States, but what happens if you're not? Right? You need a backup. What happens? What happens if we're cut off from the monetary system, from SWIFT, from U.S. dollars, from whatever, and sanction? And that spurred a lot of central bank buying. And central banks don't care about price. If they're going to buy, they're going to buy. Right. Yes. So they're not price sensitive, say as a retail investor would be. And so I just thought that was a really interesting point that he brought up. And so I think that's also, what is propelling gold higher is, we've just seen central banks hand over fist, and we're seeing, and we're seeing in large countries such as China, retail buying literally physical gold. And so I think that we've probably found our floor at about 2000. I'm not saying that we couldn't have a pullback. It's probably overbought, but if we ever see, I think everybody in the West is so used to selling gold every time. I mean, it's been a sideways market, big range sideways, but for years, right? And so I think everybody retail investing, every time they've seen a bounce in gold, everybody automatically sells it. I think that's just the kind of the automatic thing. Oh, it's not going anywhere, because it's really been stagnant for years, right? And so
it's it just that if that moment hits, it's just what could happen. It could be just it could spark something totally incredible. Now, Tracy, thank you so much for always a core partner. Lead partner for the Grizzle conferences from the start. Now, for those who don't know, where do good folks find your work across the web? Hey, we know we're family from Twitter, but tell us about all the places.
So I'm on Twitter, obviously, at Shy Girl. Because I used to live in Chicago, and I was working at the Board of Trade, and so that's how that name came about, and then it just stuck. And then also, obviously, I have a Hilltower Resource Advisors. And so I have analysts there. Plus, we do institutional. And then I also have a collaboration with Andy Constant at Damped Spring. And we have a commodity offering there as well.
Fantastic. Great. So a host of different places you can find Tracy's work. Tracy, thank you so much. We'll see you on a Twitter Spaces soon, very soon. Thank you. That's Tracy Shuchart, Hilltower Resource Advisors, longtime partner and a foundational partner of the Grizzle Hard Money Conference. Tracy, thank you so much.
Thank you, Tracy.
Thank you.
Thank you.
All right, guys, the train, it's still rolling. Ooh, we got some heavy-hitting guests. Don't go anywhere. We're going to be right back with a portfolio manager of the Block ETFs. So we're going to be talking Bitcoin miners, gold, silver, Bitcoin. Stay right here.
Dan, how are you?
I love it. I love that. Thank you for having me. This is like super exciting. I love all your guests. The brainstorming is so important. Let's just jump right into it.
Oh man, Dan, thank you so much for joining us. The PM of the Block ETF. That's the ticker BLOK.
And that's from Amplify ETFs.
That's from Amplify.
That's where you can find it.
From Amplify ETFs. There, Dan. You know what? So I was pouring through. You guys have a fan. If you are invested in Bitcoin miners, I highly recommend you read the monthly you guys put out. That's a really comprehensive piece. It's like really good work there, Dan. That just like it just gives you so much insight about what's happening in the Bitcoin mining market. And you guys have been like this. Tell us about the histories of the Block ETF. You guys were really early in this game, right? Like in block Bitcoin mining and just the blockchain in general.
Yeah. So just point of clarification. I'm the co-portfolio manager with Mike Venuto, and
Yes.
Mike back in 2018. We're an ETF shop at Tidal Financial Group, and we work with Amplify in the case of Block. Our role is as portfolio manager on the product. And one of his concerns, interesting enough, was whether or not blockchain might replace ETFs. And who knows? It might happen. We talk a lot in what you're talking about as far as our block blast every month about tokenization. And everybody seems very excited around AI, but there's a lot of possibilities in the trillions around the asset growth on blockchain.
Interesting. So almost, when you think about what the assets you guys are invested in, there's almost a natural hedge there to, just the fact of being in an ETF, right? Like it almost is like its own insurance, so to speak.
Oh, absolutely. And on two ways, it's its own insurance. One, because we have some direct exposure to the price of Bitcoin through holdings like MicroStrategy and ETFs as well in Canada right now. And so when you have a financial situation with the banks, usually you see Bitcoin rip as a result of that, right? So you have that hedge, but then also we have our business risk hedge as well.
Got it. Now we got a lot to get into, so I just want to kick it off with the Bitcoin ETF approvals. Wanted to get your opinion. How big a deal is this? Is this really the beginning of the institutionalization of Bitcoin?
Well, it is, absolutely. Listen, when you make it easy for institutions to buy things, with a regulated wrapper, they're going to do it, right? And as evidence of that, what have we seen? We've seen GBTC convert, right? And now we're at $53 billion in ETFs, right? That are giving people access to Bitcoin, right? In a safe, regulated wrapper. So whether it's family offices or insurance companies or other types of institutions, they've very much embraced Bitcoin as a solution. And, listen, Bitcoin spot now is almost or above half of what the gold spot ETFs are in such a short period of time.
Yeah, that is impressive.
That really is truly something remarkable. It's almost blown out everyone's like almost wildest expectations, right? Is that fair to say? Like, there was some like I still know like who are the big brokers were saying maybe this, but they all just proved so far too conservative.
I'll give you a pen. Not your expectations.
That's right.
Not our expectations.
Yeah.
But
all right.
So
by the way, and it's just starting. That's the thing in our opinion. So that's quite exciting. So go ahead. I interrupted you. I apologize.
Exactly. Now I want to talk about the halving a little bit. We're less than a week past that. So have you seen any good arguments for why it won't be bullish for the Bitcoin price?
No good arguments. Really,
I haven't seen any. I'm just wondering if maybe you've seen something I haven't. But
well, I mean, it's a volatile asset class. So would it surprise me if, the price retested 60K? Sure. That's possible. Would it go below that? Yeah, it's possible too. But here's the thing. First of all, you can look at Bitcoin as a store of value. You can look at it as a hedge against inflation. You can look at it as as a way to transfer value. The technology is there, and that's to me almost the larger argument to be involved, because when you're changing industries like crypto's doing, you're going to have mass adoption.
That's a great point. Now, I want to ask you on that, because I've been asking every guest this question. I'm trying to get a consensus. Does Bitcoin really have a chance of becoming a functional currency, something you would use to transact? Or is it really just a store of value? And, we've seen transaction fees on the Bitcoin blockchain have gone up. They're back down a good amount, but they spiked when the halving happened. Has that hurt that argument that it's a currency or helped it? I'd love to get your opinion.
And maybe I can add an addendum, Dan, because you own Bitcoin miners, right? And so let's talk about the other side of that, right? So there's clearly transaction fees are higher, but this is a case of feast and famine, right? We would love to hear, because this is a very, everyone should listen to this answer, because this is very nuanced, right? At one side you have the asset, but the other side is the way you can make money is through these miners and that are publicly traded, which you own nearly all of them.
To put it all in context, the ETF industry has revenues, in the context of the expense ratios of about $14 billion on a yearly basis. Bitcoin miners are, depending on when you mark them, twice that on an annualized basis. So what you're talking about after the halving, everybody thought that revenues are going to get cut in half, right? That didn't happen because of the way, ordinals and transactionals, rurals were added to the Bitcoin. And to put it in some way to understand things, miners raked in about $108 million that day.
Okay.
Versus $71 million the previous day. Okay. For some miners, it meant the difference of 30 Bitcoin mined in one day, ripped all the way up to 57. That was like a blowout situation completely. Wow. And what do we expect from the way of transactions? It's going to come down. That was basically a couple of days that the miners did really well. And then we think that, the transactional side of the mining is going to be more like 10, 15%, as opposed to 3 to 10%. So you're going to see a pullback in the amount of transactional costs, but you're also going to see price, I think, increase in Bitcoin.
So can we have the best of both worlds here? So what you're saying is that there is that opportunity where it is a net, you can transaction costs increase, but not of some great magnitude that discourage
the activity that's already going on.
Exactly. The positive attributes, right?
Right. No, I think transactional volume is going to come down in the near term and then stabilize. And then you're going to have other experiments that take place on chain that spike up the transactions, but it's a good environment right now. I mean, when you see Bitcoin at 60, 65K, it's a definite good environment for the Bitcoin miners.
And so, it's been, there's been an uncorrelation, so to speak, between Bitcoin and the miners, right? You're fortunate in the sense your top holding is MicroStrategy, so you've almost had the steroid holding of Bitcoin. But the other side of that is more recently the miners have decoupled. What do you think it takes for that recoupling? Obviously, the transaction fees help significantly. Maybe you could talk to us about the bullish case for for Bitcoin miners, but in just more broadly for crypto miners in general?
Yeah, I mean, first of all, you have to know which ones to buy. Then there's people are thinking that in this year, miners have been decoupled from the price of Bitcoin, and I would argue that's not the case, and it's not because of the way their business models work. Right, with Bitcoin price going higher, in time, you're going to see margins expand in the Bitcoin miners. And then, by the way, we're going to actually have these companies report revenues, earnings, and cash flow in this past quarter coming up, right? And so they're actually real businesses, and they're potentially trading at 2 to 4 times EBITDA, right?
Interesting.
And my point in all this is also to say that talk about something that was telegraphed. I mean, did anybody know that the halving wasn't coming? Everybody knew it. And some of these companies actually may pull back on issuing shares so that because they actually have capitalized their businesses well.
Now, I wanted to dig in a little bit. You said you have to know which ones to buy. Yeah. Can you help people with what are a few of the most important metrics you'd say that someone should look at if they're trying to figure out one miner from another?
Yeah, and this is a really important question because we follow the miners, and I've never seen a group of stocks trade like this. Like you'll get one stock up 10% and another one down 10% on a day that Bitcoin is flat. Like it is so crazy. Help!
It's like skydiving and investing.
There's no asset. We follow a lot of junior gold miners that can trade on Angola going off the rails or whatever, right? You just some sort of they miss a drill. But this is just no news. You have totally different. How should investors think about this? And you guys have always been doing this for a long time. You're active stock pickers in this space. Give us a blueprint.
Yeah, blueprint. Well, there is no blueprint, to be completely honest. We visit the miners. So I've been to Iceland. I've been to Canada. I've been to New York. I've been to
I saw your recent tweet. I love that. You were kicking the tires or checking the water.
Yeah, so some of it is also knowing the technology that's behind them, right? Not every miner is the same. The software matters as well. And how they build out their facilities is really important. Some miners are leveraged. Leverage can be a good thing and a bad thing. Certainly, in a volatile asset class, a leveraged miner might be something you avoid, but maybe it's not if as a result of that leverage creating a very regimented, rigid business plan, right? And then further to the point, sorry to be a little bit all over the place, some of the miners are also in AI, right? They're building out infrastructure in AI. So the Bitcoin mining business can be cyclical, but the AI business can be complementary in the context of how those contracts are structured.
Great. And so Scott, so you run an active ETF block that invests in just broader than Bitcoin, right? It's across the blockchain. Could you maybe obviously the focus right now, everyone's it's Bitcoin, but clearly you're seeing some interesting trends happening in growth. Maybe you could tell us some of the top themes that are helping you define your strategy along with Mike in terms of the direction of the block ETF.
Yeah. So as volatile as Bitcoin may be, there's also something called stablecoin, right? Which basically trades flat. And like PayPal, with its 420 million users, has a stablecoin. So we're long that. Oh, wait, PayPal has earnings and cash flow, right? It's a company that's transforming itself. Square is also another platform company that has earnings, has cash flow, wonderful entrepreneur leading the ship. Oh, by the way, they're building a Bitcoin mining rig that's tailored to their needs because they're in the Bitcoin mining industry. A lot of people don't know that, right? You also have smaller positions like in BlackRock. because BlackRock is getting further into the whole industry of tokenization, right? And so we think that in many ways, as the financial asset management business embraces Bitcoin spot and tokenization, what we'll see is the healthcare industry also embrace tokenization. Because wait, why shouldn't people's records be held on chain, right? Intellectual property is going to be very important in the future.
Yeah, blockchain technology, a lot of opportunities there.
Yeah, for sure. And that kind of, think about this, Dan, like it just feels like you're kind of investing, correct me if I'm wrong, right? The block ETF has, there's a lot of opportunities that could just be green shoots to something so transformative, right? And you're just trying to stay on top of those types of trends.
Oh, that's 100% true. Listen, we've been involved in Galaxy Digital for many, many years, right? And to a large degree, they've got a whole merchant banking side of their business, right?
Correct.
And venture capital as well. A lot of people wonder why we're invested in Beyond, which used to be known as Overstock. Again, they've got a venture capital sleeve on their books, right? And some interesting investments that in time we think will pay out very big.
Dan, thank you. So maybe just to wrap, your outlook for the rest of the year. Any other thoughts on just the broad landscape from the from blockchain, and also where people can find the letters and where they can find out more about the block ETF.
Sure. So obviously you can find out more about the block ETF on the Amplify website. Definitely we encourage people to go there. Separately, because I'm with Tidal Financial Group, we have something called the ETF Think Tank, and you can find out information. I've done a lot of videos with some of the CEOs on our YouTube channel as well. So thank you for having me. It's been a lot of fun. The message I would provide to a lot of folks, though, is yes, you should be looking at Bitcoin specifically, Bitcoin spot, but the transformation across industry and the innovation across industry is going to, I hope, take place through block, and we're going to capture that trend, right? And that's almost bigger than Bitcoin itself.
Yes,
it's it's almost like from our conversation. This is like almost like a venture type fund in terms of the types of opportunities ahead.
In certain cases, yes. But I mean, we are looking for growth companies. We are looking for companies that are trying to invest in the trend. I certainly wouldn't call BlackRock venture capital.
No.
But the upside is very much like a venture, right? You can have some
We had a good year last year, up almost 100%.
Incredible. Dan, can't thank you enough. An absolute pleasure. Co-manager of the Amplify ETF block. That's all things blockchain. Running since 2018. Incredible.
OG ETF.
OG blockchain ETF. Dan, thank you so much, man. I appreciate you joining us.
Thanks, Dan.
Thank you. Bye.
Thank you.
All right, guys, don't go anywhere. We have a heavy hitter in Bitcoin again. He has his own fund. Bitcoin's a holding, gold's a holding. So we're going to talk about that. We'll be back. 1 second. right, I'm not going to do him justice, but I'm going to try. It's Jeroen Blokland. He's from Blokland Smart Multi-Asset Fund. Thank you for being with us, sir.
Yes, happy to be here.
Thank you very much. And a lead partner to our Grizzle Hard Money Conference. Very thankful for that. And you know what? If I actually, talk about hard money, if there's one equity strategy, so not even, if there's one multi-strat strategy that defines it, it's your fund.
Yeah.
I think so, yes. Also because I have not found any other fund that does it the way I do. So that's a big gap I'm in, and I love it. I'm alone.
It's fantastic.
It's a great gap to be in, and that's why we want to have you on and talk about it a bit. So, your fund owns Bitcoin and gold, among other things. Could you just...
And equities.
Yes. But I'm curious, you have, there's not a lot of funds that are combining the two, right? When we started this off, nobody wanted to be associated. It was one group or the other.
That's right.
But the future is potentially both. Tell us why you believe they both make sense in your portfolio, and why haven't you picked a side?
A good question. And as you mentioned, my fund invests in scarce assets. So I look for different scarce assets. I'm a multi-asset investor. That means I love diversification. The more you can get it, the better. On the question on physical gold and Bitcoin, two parts of my portfolio. I like them both because at this point in time, each of them has features that I want to incorporate into my multi-asset fund. So when it comes to gold, I very much like the idea that it has been around for 6,000 years. Also that most of the time it has been money. Next to that, it has a proven track record of being a hedge of insurance against adverse things or circumstances. And for some people, that is equity markets going down. So gold tends to go up when equity markets go down, especially when they go down a lot. For others, it's about inflation. And of course, for some people, it's about the potential end of the financial system as we know it. And so these are two interesting parts. And the third thing, and I think a lot of people underappreciate this, is that gold has size. So the total market cap of gold is roughly 17 trillion US dollars. Now, my big idea is also behind starting this fund is that in the coming years, we will see a big outflow out of the second biggest asset class there is on the planet, and these are bonds. So my theory is that bond yields should be structurally low because of debt sustainability. Volatility is higher. It's already realized volatility on bonds is up, and diversification benefits are less. And that means that traditional investors will, to a certain extent, leave the bond market. And that means that a lot of money, it is the second biggest asset class on the planet, there has to be a other big asset class that can facilitate this migration, so to say. And I think their gold is way ahead of the others. And I think for a lot of traditional investors, this is why gold will be their first stop when they move out of bonds or partly out of bonds.
Very interesting view there. Now, I just wanted to move a bit onto the halving because it's still so fresh. I'd love to get your take. I know we've talked to some people. It's very hard to know where, Bitcoin's going to go in the short term, but just kind of as we look over like a medium term time frame, do you think it will ultimately be bullish, the halving, like it has been in the past?
I think the outlook for Bitcoin is bullish, independent of this halving. And I'm a data guy, so it is very difficult, of course, to on the number of 4 observations, and historically you only have 3 data points to say something.
That's a great point. The statistical significance of this is still yet to be determined.
That's why I don't want to talk anything short term. You're just like...
Yeah. You tried it with the long term, but still, Andy, so I come from a quant background also, and also my previous employee. Having said that, so what if you look at the 3 previous halvings, of course, what it shows is that after a rally, it kind of pauses. In one case, it was almost 6 months, and then the Bitcoin rally resumed. So it took a while. Then again, coming back to these 3 observations, in those 3 observations, we had not had an all-time high before the actual halving. So in this case, you can say this time is different. Independent of this halving, aspect, I think Bitcoin has clear also with the spot ETFs is on the right track, and my confidence that this can be the next big investment has only grown in recent months. So.
Now, I want to ask, were you concerned at all about the recent price action? I asked another guest this, where when these geopolitical tensions popped up, Bitcoin wasn't going up, it was going down, but we saw gold acting as it has in the past where it goes up. Did that concern you at all, or would love your thoughts?
No. I think, first of all, of course, we also saw some saturation in the inflows of the spot Bitcoin ETFs, so that also happened. And next to that, we have to take into account, I think a lot of people who like Bitcoin do not appreciate this enough, that it's not fully integrated into the financial system as such, liquidity-wise, size-wise. And so it's still uncertain where things will go. And also one important thing I would like to make always is that because this is competing with sovereign money of governments, you can expect that from time to time, there will be an attempt or an idea floating that maybe this should be forbidden, right? This is, of course, a big risk. And I think when you add all these different layers together, that basically defines the overall volatility of Bitcoin. And I think that overrules the, let's say, geopolitical part. Having said that, also on the gold part, there's also an idiosyncratic factor, and that is China, of course. And so gold has done reasonably well in geopolitical tensions going up, but there was also this other demand factor at work. So yeah, two different things, I think.
Can I ask a question? Just, how do you see like natural buyer? Are we bifurcating the market right now? Like, is Bitcoin the digital gold, but for a younger generation, or geographic specific, and does gold kind of fit more emerging market, both central bank and consumer? Because clearly in North America in developed markets we're not seeing that necessarily consumer demand for gold or central bank for that matter.
Yeah, so this is an extremely complicated question. I get it a lot because if you look at, let me first say the emerging markets. In the case of China, I think you are right, because in China it's difficult to get your hands on Bitcoin. But if your main source of wealth, housing, is going down almost 3 years, your currency is depreciating, and interest rates are very low compared to your growth level, it's not that strange that people try to find some other thing to store their value or think. So I think that is true. Then two things on the gold part. The first thing is I speak to a lot of people now who invest in my fund. I can tell you that gold is almost as popular with younger people as Bitcoin is. Therefore, they have the same idea about it. Maybe it's more straightforward because it's all digital and apps and all these things. But I feel these people understand the scarcity aspect, and that is why they like it, or they like both of them. And then one thing on the demand, and I don't have the exact answer, but take my fund. I do not buy ETFs. I want to have physical gold in a vault in Switzerland. So that is my idea. Okay. I do not. Yes.
Oh, I didn't know that.
Yeah.
So and then you're obviously storing your Bitcoin as well. So this is like a true hard money. This is as hard money as it gets. That's incredible.
So this was when I designed the fund, this was a big decision to make, because for a lot of institutional investors, I think they are inclined to say, just give me the ETF, and if it's physical backed, it's okay with me. But if you let them think about that, what that actually means, what do you want with it, then the whole let's put it in Switzerland becomes. But coming back to the demand question, I am not in the physical gold ETFs demand, and yet my fund is growing. So I'm having a little bit difficulties to say the West is not participating at all, because I'm going to another route and still add every month add gold to this vault. So I think it's more complex than it's suggested by a lot of people.
That's a great point. And so it's not, you just don't want to use the barometer of the GLD, so to speak, right? That's a fair comment, right?
Of the holdings, the known holdings, ETF for the gold physical ETFs, that is going down. We all know the chart. I see it in Bloomberg every day, but I'm not in there. and I buy gold. So it's not that straightforward.
Yeah, that's a great
That's a
point.
very good point.
And so you're so the fund with respect to gold, you're owning physical gold and you're taking custody. And I assume you do that for Bitcoin as well.
Yeah, of course. Yeah. So that is on Bitcoin part. There is also the emergency break. So you have to be able to trade, but you wanted to have it in custody. But the same holds for gold. And I think for a lot of traditional investors, as I mentioned, the first stop will be gold, and then I would like to make them think about this as well before they decide, okay, just give me the physical gold ETF, it's cheap, okay, that's it. But what is the actual reason that you want to add gold to your portfolio? Is that a scarcity thing against the abundance of debt? Then you have to think this through. And this is why I made the decision to have the physical vault and its own vault and bar numbers and things like that. I learned a lot about gold in the past 6 months.
Now, I wanted to ask you, we've kind of all been in the industry a similar amount of time. Would you say that since we've been investing, is this the golden age of hard money? Is this one of the best times to have allocation to hard money?
I also got this question. So when I hear hard money or hard assets, I immediately think about inflation, because this is, I think, the definition that is behind it, that it is something that keeps its value when prices go up, right? But I think since the great financial crisis, if I may, I would rephrase this: is it the golden age of scarce assets? Because next to the inflation thing, we now have the abundance of debt thing. And if you say, right, I want to have scarcity, it's against inflation. It's abundance of price inflation, but also the abundance of debt. So I would go a little bit further and use the word scarce. So scarce money, but in essence, these two are very close together. But I think this is the add-on that I hope to bring, the scarcity against those bonds that are flooding the market.
Oh, fantastic. So I've written that here. It's not just a golden age for hard money. It's a golden age for scarce assets. That's a great.
Should I copyright this or what?
Yeah, you should. And listen, it was live, so it becomes copyrighted. We have the physical proof of where it was birthed.
Okay, fine,
and I'm writing it on the screen here with your quotes in there.
Okay, nice. Thanks.
Yeah.
So I wanted to dig a little bit into the emergency brake that you use on the fund. Tell us more about this indicator. Was this something that kind of came from when you were at Robeco and then it drove you to start this fund, or what's the history of that aspect of the fund?
Yeah, now the philosophy about the abundance and scarcity thing we just discussed, that is the trigger for me to start a fund. But yes, as a multi-asset investor, I'm entirely afraid of risk. I think risk is maybe the first thing to think about when starting a fund or constructing a portfolio, and then you think about return. And that means I wanted to add something that gives us the possibility, nothing is certain of course, that if we get a major crisis, a financial meltdown or whatever, that there is some instrument that helps me to get out of the market. And the emergency brake is how we call it, but it is based on a well-known indicator, the moving average. So we have backtested the moving average, I think, for the S&P 500 until 1955. Of course, the secret sauce is how you implement the emergency brake, but it is based on the moving average. And why do I love the emergency brake so much? Again, as you mentioned, this was already the case at Robeco. The thing is that on average, this is whenever the S&P 500 index is trading above the moving average, the daily return is positive, again, on average. When it's trading below the moving average, it's the daily returns are negative on average. And this means in the whole academic literature, everything is about a little bit better than average. Is it significantly better than average, or is it a little bit worse than average? But this is for clients very intuitively to understand. It's either green or red, it's positive or negative. And this is the starting point for constructing the emergency brake. And also, if I don't know if you have the chart available, it still means that you will go down from time to time, but in the big sell-offs like the dot-com bubble, the great financial crisis, COVID. It also worked in the very fast decline, COVID, and of course the the inflation scare, so to call it. Every time the emergency rate got out, sometimes at -20, sometimes at -15, but you want to prevent that you end up with this -50% drawdown, because then your portfolio, or the stock market in this case, has to double to go back from where you were. And I don't want to have that. So my aim is to, whenever it becomes systemic risk or something, then at some point we have to get out.
Thank you so much. That's a fantastic overview. Now, Jeroen, can you tell our audience about your background, running billions at Rozencwajg, and also launching this unorthodox fund?
You've had a similar arc to us, right? Because we were at a big asset manager, and then we ended up launching a fund. You've done the same thing. We'd love to hear your story, how you ended up in that place.
And then lastly, where people can find out about the fund.
Yeah.
Yeah, okay, sure. Okay, let me start. So I have been a multi-asset investor my whole life, and most of my professional life that has been at Robeco. Two things happened. First of all, I always had the urge to start something from scratch by myself. I wanted to know, can I do this? I was head of a team at Robeco. I think I was capable of doing multi-asset stuff. Can I do this? The second part is, of course, and then coming back to the fund, is the traditional world was not ready for a little bit, you call it unorthodox, a mix of these different, and that means if you want to be brave, let's call it brave, then you have to pioneer. So that is what I did. And the thing is, and I think I also mentioned that at the start, the gap between the traditional investment world and the alternative world, the Bitcoin maximalist and the gold bugs, the space in between is massive. But when you sit down with investors on both sides and you discuss this whole scarcity thing, the debt thing, most of the time they agree and they are thinking about it at the same time. And that means it was a big gamble to sit in the middle and no one was there. But whenever they decide to move, I'm already there. So that is basically where I'm at now. What was your final question? Where you can find me?
Where can they find out more? And well, obviously you're on Twitter, but to find out more about the fund itself, it's Blokland. Remind me the URL.
Yeah, so you see my name in the view, I guess. So it's bloklandfund.com, and not with CK, but only the K, but bloklandfund.com. Then you will see everything. You can find my Twitter, the philosophy. You can download the presentation. You can contact me if you want to. I'm more than happy to talk about it, of course. It should be straightforward from there.
Jeroen, thank you so much for joining us. This has been a pleasure talking with you, and we'll be following the fund closely. We're wishing you the best of luck there.
And thank you, a lead partner for the Grizzle Hard Money.
Thank you.
Thank you very much. That's the Blokland Fund. Thank you.
Yes. Thank you, guys. Thank you for having me. Have a nice show. Ciao.
Yeah,
bye.
It's nighttime over there.
yeah. All right, everyone. Don't go anywhere. We got a very special guest to end things off. Math, Money, Bitcoin. You might know Fred Kreuger from Twitter. He's one of the most impressive thinkers on Bitcoin, and he's a self-professed Bitcoin maxi. We're going to be right back with him. Don't go anywhere.
Hey, welcome back to Grizzle Hard Money, Gold, Silver, and Bitcoin. Fred Kreuger, he's on Twitter. Fantastic. Fred, you just kind of burst on the scene, and I kind of followed you. And now you've got your YouTube channel, Math Money Bitcoin. Thank you for joining the Grizzle Hard Money Conference.
Yeah, thank you.
Thanks, guys.
Yeah, well, Fred, I just have to say, when you kind of, when I've been following you and just your work on Twitter, it's incredible. It is incredibly deep, right? And I think there's always someone who red pills you. And I think I have to say your work is really, just what you've been highlighting has really, from my perspective, really been one of the strongest arguments for Bitcoin. Maybe you could just talk about just how you view it. And I know you get really in depth on the math side of it, but just maybe your philosophy around Bitcoin and why you're such a big believer and a maxi.
Well, okay. Sure. So I think, first of all, Bitcoin is the money for the 21st century, right? It's not just another asset. There's gold, there's silver, but those are the past. I think Bitcoin is the future. And I view that we are in the process of moving our entire monetary system over to Bitcoin. That means the dollar, the yen, the euro, everything. It's all going to go to Bitcoin. Now, that's kind of a bold claim, and it's not going to happen tomorrow. It'll take 20, 30 years to do. But this is a fundamental technological improvement. It's an upgrade to the financial world. And if you sort of think about it in really big terms, right? You had gold. Gold was the standard for 5,000 years, right? It really was. The world worked on gold. The Medicis in Florence transacted in gold. The Romans before them transacted in gold. The Greeks before them transacted in gold. So gold was the standard right up until the end of the 19th century, and we started moving to dollars, right? And why do we move to dollars and pounds and other fiat currencies? We moved because they were much more movable than gold, right? You needed to move much better to move a dollar than to move gold. And initially a dollar was backed by gold, right? It was it was 32 ounces of gold. $32 to an ounce of gold, right? So that was the price. And and that price held for 100 years, right? So we were on this gold standard for quite some time, but the dollar was sort of this, more efficient token to transact gold. And now we're moving to yet a new standard, right? Which is Bitcoin. Now, why do I think Bitcoin is so superior to both gold and to the dollar, which supplanted it for so long? And I really think there are, it has three key advantages. One of which it shares with gold, which is that it's hard, right? It is hard money. Bitcoin is hard money. You can't make Bitcoin. You can't make gold either very easily. It's very hard to mine gold. But Bitcoin shares that hardness with gold. On the other hand, it also shares the movability with fiat, right? You can move Bitcoin very easily, and you can't move gold very easily. So it really has the best of those two worlds. And then it has a third advantage, which is completely unique, which is that you can hold and you can secure Bitcoin very easily yourself, right? So, owning a lot of gold is a problem. Where are you going to put your gold? You're going to bury it in the backyard. You're going to put it in a safe deposit box. Well, check out the actual security of a safe deposit box. Well, first of all, it's some bank clerk who's making $20 an hour who's going to be kind of like, gating your security, your safe deposit box. He's going to check your ID. He's going to check your signature, and are you going to trust your fortune to a bank clerk who makes $20 an hour? Who's some guy walks in with a fake ID and makes your signature? That guy walks in and gets your safe deposit box. You know what I mean? So it is not secure, right? So on the other hand, Bitcoin, and when you get more and more gold, it becomes really problematic, right? Like, you're going to put $1 million of gold in a safe deposit box? I don't think so. You're going to put $10 million of gold in a safe deposit box? You better be a special safe deposit box at, JP Morgan, New York, and you have a private client, you have a node on there. But I'm just saying it's difficult to secure gold, right? Yeah. Bitcoin has this unique thing, which is actually you can get very, very good security of Bitcoin with very low tech, right? A couple multi-sig wallets and you're good, And so, this, you could secure $1 billion, no problem, in a multi-sig wallet, right? And you can walk this money outside between countries. So it really is better monetary technology. It is a breakthrough in monetary technology. And so that's the general thesis as to why it's better money, right? Mm-hmm. Now, you don't go from changing the entire monetary system of the world overnight. That doesn't happen. But it's happening pretty quickly. We've got, over the last 15 years, we've gone from 0 to $1 trillion in market cap. We've gone from 0 to, let's call it 100 million users worldwide. We've gone from 0 to, 9 new ETFs that carry Bitcoin. So we're moving very rapidly. Some days it doesn't look like it. Some days you look at the price of Bitcoin, it's down, you're like, oh, what is it doing? But zoom out a little bit and we're moving very, very quickly, right? And furthermore, if you start, really plotting this thing and analyzing the growth, you realize that actually we're growing very, very consistently on a logarithmic scale, right? So we're moving very much in, if you sort of looked at it really from start to finish, I would say 40 to 50 years will be the amount of time it takes to completely change the entire financial system, right? So, 20 years from now, 30 years from now, it's great, but your children and your grandchildren will not know what a dollar bill is. I mean, they just will not.
Wow,
it'll be like, what was that? Just like they won't really understand what gold is, right? Like your grandchildren, they won't. They'll be like, what is that? I mean, I guess that's some kind of mineral that you use in,
So Fred, maybe just because like what you're defining, it's an incredible vision, right? Like this is like almost like a transformation that, you just, if you're living in the here and now and operating in the current monetary system, it's just so profound. But let's go to that grandchild's world, right? Where it's all happening in Bitcoin. What's the purpose of a bank in that environment? Or and I guess secondarily, during that period, we're clearly going to see a pushback from the current establishment, so to speak. Both,
we have. Okay, first of all, we have seen pushbacks all along the way, right?
Yeah.
There's this great thing called Bitcoin is dead, and it kind of every 3 years there's every 3 days almost there's some guy says Bitcoin's dead,
Yeah.
And they've been saying it now for 15 years, right? So it's like back in 2010 there were people saying Bitcoin's dead. 2011 Bitcoin's dead. Peter Schiff has been saying Bitcoin's dead literally for a decade. I
think that's just a marketing ploy of his. It just feels more marketing than reality for him.
Well, no, I do think he actually believes his own story. I do think so. So look, people do think Bitcoin is a Ponzi scheme. It's a pet rock. They all believe that. It's so crazy a concept to think that we could be moving into big change. Is you don't see it, right? Because it's obvious, but you don't see it. And so, look, I think if you told the average person 20 or 30 years ago most commerce is going to be happening over the internet, they would say, what are you, crazy? What? Like you're not going to have people buying shoes on the internet. But guess what? We're buying shoes. We're buying orange juice on the internet right now. Okay.
Right.
So, Amazon Fresh delivers within a day, like you can get stuff within 3 hours on the internet. So, we're facing there are certain fundamental changes that happen in our world. Bitcoin is one of those changes, right? And so, I think that, and it's not going to be anything else, right? It's not going to be Ethereum. It's not going to be Solana. It's, Bitcoin is going to be the unit of account of the world. There's only one cryptocurrency that can do this job, which is Bitcoin. It's not going to be anything else. So I think it's hard. So first of all, you said, are there people going to stop it? They've tried to stop it. People tried to stop the internet at one point, right? People thought, okay, this internet thing is going to be, terrorists are going to use the internet to plot the next, 9/11. You know what I mean? There was a lot of people who said that very seriously. And, you can't stop these major things. So as far as, people trying to stop it, the old order always wants to stop the new order, right?
Why do you think they let the Bitcoin ETF happen?
One really good example. When Roman numerals came out, right? Somehow I'm getting a little fuzzy picture here, but when Roman numerals came out, there was laws in medieval Europe to outlaw them. You weren't allowed to use algebra, okay? You weren't allowed to use multiplication. You had to use, they said,
take those fingers out and put those fingers back in your pockets.
No, there literally were multiplication shops in Germany that were basically, there was guilds, like unions, okay, that kind of used multiplication. So, and they used abacuses to do multiplication, right? And if you wanted to do a complicated multiplication, you went to one of these shops. It took you a week, and they charged you a fortune to do, a bunch of multiplications. And, then some people in Venice in the 1400s said, well, we can figure it out. We can do it ourselves with these new Arabic numerals, So, people resisted it. It was literally an offense in Germany to use Arabic numerals and to do multiplication. So, obviously we move to better and better technology. Bitcoin is better technology. It's taking over the world. It may not seem like it's taking over the world, but it is taking over the world. And so
Fred,
that's kind of my general position.
Yeah. And just maybe on that kind of people try to block change and, that doesn't, advance themselves, right? Why do you think the Bitcoin ETFs got approval? Because a lot of, if you kind of viewed Bitcoin as anti-establishment, what do you think transpired there to allow it? And Fred, you nailed just the profoundness of the ETFs. I don't think I've seen anyone else on in Bitcoin Twitter. Yeah, Bitcoin Twitter, nail this in the way that you did. Nowhere close. Like you were like, this is way bigger than the halving, and 1 week out, you've been proven 100% right. But what gave you the? I guess just maybe not. Why do you think they allowed?
Okay, so I'll tell you why. First of all, why I saw it and other people didn't. Right.
Yeah.
And the reason I saw it is I have both a Bitcoiner background and a finance background. Okay. So I spent 6 years as a prop trader on Wall Street, at the top firm at the time, Salomon Brothers, right? So I traded $1 billion worth of bonds. Okay. I did, I ran the prop book trading. I was part of a team of 15 people who traded the account of the firm. Okay. So I have a lot of finance background. I made my first fortune in finance, not Bitcoin. Okay. Not tech, right? But I have the finance background.
So you know what? I thought you made your money in tech. I thought you made your money in tech, and I find out now you're a superstar trader. I just thought tech was your that was the big.
Well, what happened is I started in tech, right? I started in finance. Sorry, I spent 6 years on Wall Street, and then I stopped And in 1992, I started a software company. And there were very few startups, believe it or not. And now there's, I don't know, everybody and their brother has a startup, right? Like I'm right now in a WeWork that's filled with startups. There probably was 100 startups in software when I was doing them. Like nobody. There was like, there was a 3D guy, you knew that guy. There was a guy who was doing a calendar, you knew that guy, and we'd all go to Comdex and show off our stuff, and I won Best of Comdex once and gave a demo to Bill Gates of my software, and I ended up selling my software, so I was very early in tech and, really, we're talking the era of shrink wrap software. If you can even, you probably don't remember it, but you might've heard about it, where, you buy these pieces of software with discs in them, and they ship. Anyways, that was my first software startup. Okay. I sold it for $20 million, no VC funding. Right.
Amazing.
And I did 10 like that. Okay.
Wow.
So I've had $500 million worth of exits. And this is all before crypto, right? This is all before crypto, right? So, I'm one of the more serial guys you will ever meet. I'm not, there are people who've made a lot more money than me, but I made a lot of money, and I made a lot of money.
Very active though, too. More active than most.
Yeah, look, I've been doing it for a while, right? So, you kind of see these different phases of the stuff. When initially it was shrink wrap software, then the internet came, and then, much later cryptocurrency evolved. By the time crypto kind of came on, I was already like this dinosaur, like people like Fred, no, you're just like this you're a legend in ad tech, but whatever. And I was like, yeah, I'm kind of interested in this crypto. And my initial thought on crypto was all wrong, right? Because most tech people don't understand Bitcoin at all, right? Because what they think is you're going to have MySpace and then you're going to have Facebook after MySpace, right? So they think some new technology is going to come and make it better. So, and that was my thought initially too. I thought, let's figure out what's the fastest, cheapest consumer tech out there, right? Yeah. And at the time, it was a blockchain called EOS, right? So I built a wallet for EOS. I said, well, I'll build a wallet for EOS. Ended up becoming the #1 wallet for EOS. And then, in 2019, I started getting Bitcoin religion, and I started thinking, this Bitcoin thing actually might really be the answer. And I got the Bitcoin religion, and I got it from this guy named Tom Lee, who's he's on CNBC a lot, and I was adding it.
Yeah, he's great.
Yeah, he's fantastic, right? So, but he had a very cogent argument, I think, for why Bitcoin and crypto in general, but in Bitcoin specifically, was going to be really the future. And so I, happened to hang out with him in this event in the Bermuda, and I was there for 3 days and had a lot of time to think about this stuff. And I got orange pilled during that event, and then after that, that was 5 years ago. And, after that, I, picked up quite a bit of Bitcoin, right? And I became a kind of a Bitcoin maxi, but you'd never heard of me. I wasn't on Twitter at all.
No.
And then what happened is when these ETFs came out, I sort of said, I raised my hand on Twitter and I said, listen, guys, I happen to own a lot of Bitcoin, and I happen to be an ex-trader. And let me tell you what's going to happen. I said, first of all, I think these ETFs are going to get passed. And second of all, I think you guys are all underestimating the impact of these ETFs. Like this is really the next phase of Bitcoin, And I understand everybody's into self-custody. I'm into self-custody. But realistically, most people my age are not going to self-custody their Bitcoin. It's just not going to happen. No. And by the way, I watched the gold ETF. I was involved in gold right before the gold ETF, right? And I remember it well, in November of 2004, right? I remember that gold ETF quite well. And I owned, and I still own, physical gold from before the ETF, right? So, I remember that ETF, and gold was around $400 when that thing came out, and it went straight up to 1,800. I mean, over a period of 5 years, essentially, right? But basically, it went up quite a bit at a period when nobody was really concerned about inflation. That's, if you go back to 2004, inflation was not on people's minds, right? So
it's fascinating. So that parallels there, and just, but I guess just, is there, if I was a banker, call it Jim Diamond or whatever, right? And I was worried that this thing, maybe I don't believe in it. Maybe, I'm taking the view of that, like your whole MySpace to Facebook, but irrespective, let's not have something. What allowed it to pass? Maybe just drilling deeper. Why do you think they allowed it to happen? And just given the move,
So I think they allowed it to happen because Gary Gensler was in a bind with this GBTC court ruling, right? And so there was this court ruling which was not in the SEC's favor, right? And I think it was really a choice of either allow Bitcoin or fight the court ruling. And I think they sort of figured, okay, Bitcoin, let's let this one slide, right? Bitcoin is, he's not said Bitcoin is a security. In fact, he's sort of said many times it's either not a security or it's a commodity, or he's never completely said it's not a security, but he sort of did, right? And so I think it was sort of like, let's let this thing slide. We have BlackRock, who is a sponsor of this thing. They're an adult in the room, right? And let's let this one slide. I don't think he's going to let the Ethereum one slide.
Yeah.
I don't think we're going to see any more of these ETFs anytime soon.
No, Fred, I wanted to ask kind of an overarching question.
I think part of it, he might have sort of regretted it a little bit, because I think
he should have read your work.
He
should have read your work.
Well, I mean, listen, I'm the happiest guy ever that he did it as a Bitcoiner, but I think right now with Ethereum, they are sort of going, okay, we do not want a repeat of this with Ethereum.
No.
Right now at all. And so, I think this is all connected with the consensus lawsuits and, all this other stuff with Ethereum. And I think this thing has been more successful than they thought.
No, Fred, I have to ask you.
And I think we're doing nothing yet. I think it's going to continue right now. I think it's clearly, right now we hit an intermediate high on Bitcoin on March 15th, at 73,000. And I think, because Bitcoin itself traded lower, I think the funds sort of dried up for now. But Bitcoin takes another rally up, those funds are going to come roaring back.
Yeah, that's a good point.
So
now, I saw you tweeted that you believe that ultimately Bitcoin will be the only form of money accepted globally. So my understanding that you think it will be a transactional currency in the future. Am I hearing you right?
Yeah, 100%.
Could you help us understand how that will evolve over time?
What is the role of banks? Sorry?
I'm just wondering could you help us understand how that evolves over time, looking at the halving and transaction costs rising a bit? Like, how does this all, obviously we need lower transaction costs. How do you see this playing out maybe over time?
No, we don't need lower transaction costs because at the end of the day, Bitcoin is going to be the ultimate settlement layer for value on this planet. It doesn't mean that everybody's going to be transacting directly with Bitcoin, right? They could be transacting with intermediaries like JP Morgan, right? JP Morgan, for example, could issue something that they call Chase Bitcoin, CBTC, right? And CBTC is backed 1-for-1 with regular BTC, right? Okay. Now, if you want to buy any CBTC, you can trade it, and it's trading on its own blockchain or Solana or wherever you want it, Ethereum. And CBTC is super fast, and it costs 1 penny transaction costs. Okay.
Right.
Now you want to buy or sell CBTC? You can exchange it with for regular BTC with Chase. It's fully exchangeable, and that fee might be $10. So you don't need. And by the way, this is sort of a version of traveler's checks, right? Back in the day, right? You took those traveler's checks with you, and look.
Fred, that's a
layer
great
twos are going to
analog.
happen.
That's a great analog. I don't think anyone's ever said it that way. Traveler's checks, right? Like that, it really is, right? You're not traveling with all this money. You take these checks.
You take the checks. And by the way, you lose the check, you might even be able to get a replacement check, right?
Right.
So even at the very beginning, when Hal Finney was talking about, when he first discovered Bitcoin, I think he was probably involved in the creation of Bitcoin, but when he first started talking about Bitcoin, right, Hal Finney said, there will be Bitcoin banks, right? And so I fully believe that the banks are going to have a role in this whole thing, right? I think there's going to be Bitcoin banks. I think there will be Bitcoin loans. I think you will say, I'd like to buy some. I'd like to borrow some money. Great. How many Bitcoin would you like to borrow? I'd like to borrow 10 Bitcoin. Great. Rate of interest on that is 5% a year in Bitcoin. Okay. You have to come back next year. It's due next year, and you have to pay me. It's due in 2 years. You have to pay me 11 Bitcoin. Great. Yeah. We just have to start thinking in Bitcoin, right? So we have to have a financial system that works in Bitcoin, right? If we have a financial system that works in Bitcoin, then everything works. And it's a financial system with 21 million Bitcoin, Will some debt go bad? Yeah, some debt will go bad, just like debt goes bad right now. Some people, it doesn't mean that all people who borrow are going to pay back their money. They won't. But I definitely think that we are going to be moving to this new standard over time. And, I think we're still very, very, very far away from it, right? So I would say kind of in terms of price, right, we'd have to go up 100x almost from here in order to really be, for Bitcoin to be the world currency, right?
Okay, so 100x. And so
we're sort of in the first.
And Fred, there's a question.
Yeah, we're in the first 1%.
Someone's asking, well, with Bitcoin's high volatility, they don't see it happening right now. But to your point, it's going to be 100x from here. But the other part too is, how can I tell it's maturing at the same time? Like, just maybe another way to put it is, just say, I get red pilled or orange pilled, and I just say, okay, I go put all my assets in Bitcoin. But just that the drawdowns, and something we followed is the drawdowns in Bitcoin end up making it a very tough, something tough to swallow as a store of wealth, or something I can lean on. How do you think, is it just time that reduces these massive drawdowns? Like the next massive drawdown won't be 78%, it'll be 50%. And it just, by the time you get, 100x from here, you're not getting these massive drawdowns?
Well, I'll tell you something. If you look at the major revolutions, they cause a lot of casualties, right? The French Revolution, in particular, a lot of heads were rolled, right, including the king and everybody connected to the king and all the aristocrats and stuff. It's very messy, right? So, are there going to be drawdowns? Yes, there are. Yes, there are going to be drawdowns. Do you want to get rich? If you're going to get rich, you got to hold your Bitcoin. It's that simple. Okay. No free lunch, So it's sort of like, there will be drawdowns. And the people who hold their Bitcoin are the ones who are going to be giving the orders. The people who sell their Bitcoin are the people who are going to be working for the people who didn't sell their Bitcoin. That's kind of my view of the world, right? So it's a little bit of a Darwinian view of the world, but I kind of think that the next 10 years are like the Hunger Games, right? It's like, we got to figure out how to accumulate the most Bitcoin possible. Some will be very good at it. Others, they're going to die in the dust. Okay. And I mean, you pick the wrong asset, you hold your money in dollars, probably a really bad idea. Mm-hmm. Hold your money in gold, you're going to do better, right? But you're still going to vastly underperform Bitcoin. You hold your currency in another cryptocurrency, you might do okay, but you're going to vastly underperform Bitcoin. So I think Bitcoin is the apex predator over the next 20 years. And I think that basically those people who play their cards right are going to do well. And I think playing your cards right generally means hodling your Bitcoin through massive drawdowns. But look, it's sort of like, in general, I think you have to go the exact opposite of the crowd. I mean, people are like, Fred, how did you get rich? I got rich by not doing what everybody else did. That's how I got rich. Okay. And like right now you go, okay, if you want to do what everybody else has done, you're going to hit the exact average, right? That's sort of almost by math, right? That's exactly what's going to happen. And right now, if you're young, I'd say, if you're a millennial, right, you're under 40 and you're about to buy your first house, I think you should really think, okay, is that really a great use? Is that financial decision a good decision right now? Or should you maybe take that down payment that you're going to make on the house, put it in Bitcoin, and take the difference between renting and your mortgage payment, right? And stack more sats.
Right.
I think the people who do that are going to end up far better off than the people who bought a house at these kind of prices that they are now. I think these macro decisions matter. And yeah, there's going to be massive. I don't think that we're done with the drawdowns. I think we're going to have massive drawdowns.
Right. So it is. I still do. So.
Yeah, it is going to be volatile. Look, and I think it may be, you can sort of say, can I trade it around it, right? Well, maybe. And I think that this power law tells you a little bit of, it gives you a little bit of a compass for if we're overvalued or undervalued, right? So, the power law would have told you that in 2017 at, 19,000 that we're pretty highly overvalued. It would have also told you at, at 60,000 in 2021 January, we were probably overvalued, right? I would say it's some reference, right? And right now it sort of says you're kind of fairly valued, right? So I would say if we got to one of these sort of peak things, I might personally take a little bit off the table, only to try to buy it back a year or two later, only. But I wouldn't even do I wouldn't do it with like any more than 50% of my stash. You know what I mean? Like I just don't. I think you're almost better just completely hodling it and just not even worrying about it, and even taking the 70% drop doesn't matter.
And so,
I mean,
Fred,
I took the 70% drop in 2022. It's fine.
No, for sure.
Okay
you entered before the drop, and it's still almost like fortitude. Your belief in Bitcoin.
And I bought more early in 2023. So
So I got one question is, so it almost, so you've made you've driven success. A big part of it's getting ahead of the curve, right? And I can, in a long time, from software to internet, and now Bitcoin. is it almost like, if I'm understanding correctly, it's almost like this Bitcoin for you is one of the greatest capital opportunities, full stop. Do you not see that? Like, maybe your thoughts on, say, AI, because, do you not see AI as something profound that you would, or do you see Bitcoin as a multiple of the opportunity of AI, or are they exclusive?
Look, I think AI is going to totally. If you ask me, is AI going to change the world completely in the next 5 years? I'd say, yeah, 100%. Right. Can you tell me what AI stock I should buy right now? I don't know. Right. I don't know if AI is going to change the world because of Google, because of OpenAI, because of AI that's integrated into Tesla's self-driving stuff. AI is being integrated everywhere right now, right? So AI is more of a fact as opposed to an investable idea. I think it's probably good for Google, but it's also good for Microsoft, and it's, you know what I mean? Is AI? To me, it's more a question of, I think Bitcoin is probably going to do more than 10x in the next decade, right? I am not so sure about Google. Let's just taking that as an example, right?
Fair.
Do I think Google will 10x in the next decade? I think probably Bitcoin will outperform Google in the next 10 years. Okay, that's my impression, right? Now, I'm not saying it's bad to buy Google. It may do okay, but it's pretty discovered, right? It's pretty owned. People own Google right now, right? Now, so I think to some extent that's sort of priced into the market, and I think Bitcoin is not priced in, because I don't think most people my age, most boomers my age or older, don't own a lot of Bitcoin. They don't. You know what I mean? Most gold bugs don't own a lot of Bitcoin. They own a lot of gold. They don't own a lot of Bitcoin. So I think that we're at a 1% adoption of Bitcoin. Maybe 1% of wealthy people have Bitcoin. I mean, that's kind of I'm going to say, people who have $100,000 or more in savings, how many of them have Bitcoin? I'd say 1%. You know what I mean? Like, that would be my number.
Yeah.
So how do we go from 1% to 50%? Like, how many people over $100,000 own either stocks or real estate? I would say 80%, right? If you have wealth, it's either in stocks or real estate or both, right?
Yeah.
So maybe it's 100%, but between those two classes.
I think so.
Right?
Yeah.
Now, yeah. So, and how many people own gold? Pretty small. It's 1%. Maybe it's 2, 3, 4% own gold, right? It's not that big. But I think gold is not going above that percentage, right? We've seen kind of gold's been marketed now for quite some time, right? So everybody who knows about
baby
gold,
Jesus,
everybody
arguably.
can know about gold. What?
It's been marketed since baby Jesus.
It's been marketed since baby, and well marketed too, right? So look, I'm not saying it's a bad investment, but it is it's well understood, right? I think, whereas I think Bitcoin has this sort of discovery process ahead, and especially with these ETFs, people really, the first time most normal people could buy Bitcoin was on January 11th, when these ETFs were and they're only still starting to discover it. So I think you have a huge runway of just people who are going to discover Bitcoin in the next 2, 3, 4, 5 years, and that's going to drive the price of Bitcoin up. It won't drive it up continuously, because everybody freaks out in any kind of bear market or Israel war or whatever. But over time, people are going to move their money into Bitcoin. So it has much more upside than gold.
So, Fred, a question on, because you make a very convincing case for stacking stats, and there's going to be Hunger Games, so to speak, and with great analogs. So if I were to take your your vision, and I was like, well, listen, then like, shouldn't I do a micro strategy, Michael Saylor, and like borrow fiat currency to get more Bitcoin? Or is that like, do you advocate putting leverage on this trade, or is that a risky proposition just given the downdrafts? Or secondarily, do you have leverage on the trade yourself? Like, because one thing is going to depreciate and you can go buy the real thing.
So no, I have a little bit on the only way I have some leverage is I own some call options. So when these ETFs first came out, I bought a bunch of, but before they came out, I bought a bunch of call options on BITO, which is the futures ETF. And I also bought later some call options on MicroStrategy, right? So I'm long calls, just as because I do think, and they're very long dated calls, leaps, right? So my gut feel is over the next 2 years, right? We're going to do.
You're like, when you buy those long dated calls, your risk is defined. You're going to lose what you either make multiples or you lose that. You're not going to be.
Yeah. I think it's a terrible idea is to go long something like Binance perpetuals, with you have one wick down, you're liquidated. Terrible idea, right? So I think you need to kind of make sure that whatever you're doing with leverage has a very, defined downside, because, look, I definitely think that we could have a wick down. It's possible, right? But as long as you're holding actual Bitcoin or ETFs and you're not a forced seller, you're going to be fine, right? So I think in general, I would discourage leverage, and I don't think it's needed, right? I think most people, the problem is they just need to get to like the kind of a proper allocation to Bitcoin, right? So what is a proper allocation? I don't know, something like 10% of your having something like 10% of your net worth in Bitcoin for the average person who doesn't really get it. I think it's probably a good idea. Like if somebody was like, Fred, how much money should I put in Bitcoin? I'd say, put 10% in there. You know what I mean? Like, I wouldn't say 1%. Like 1% is sort of like, this is like a lottery ticket. This is not a lottery ticket. This is like, everybody should consider putting 10% of their money in Bitcoin. It really has these things. Now, if you really believe in it and stuff, like me, that number is way higher, right? But like,
Fred, Fred, you have a great point here, and I wanted to address it, right? You talked about purchasing a home or buying Bitcoin and the differential between renting and you put it away. That that kind of left me with a thinking, right? Just about how profound that is, because a lot of Gen Zs and millennials, they can't even buy a home, right? So is Bitcoin their home? Like the purchase, for boomers, Gen Xers, the older millennials got into the housing market, but because of ultra low interest rates, the price of these assets are sky high. That becomes a lever, just because now you have this younger cohort where this is their effective home purchase, so to speak. Is that a kind of natural tailwind here?
Well, this is. Yeah, look, I think. Well, you make a good point, right? So I definitely think that the home, for a lot of people, the home is really where most of their money is, right?
Yeah.
Even today, right? Most boomers have, so the average house in America costs $500,000 right now, right? Yeah. So I would say the average person, if you're a boomer, you bought that house for, $150,000, right? So you have $350,000 sitting in your house, right? That's your main savings account. You might have $100,000 in stocks, right? I'm just picking the average, Yeah. Kansas, Wichita, Kansas, some guy in, you're not buying a $500,000 house in New York, obviously, or in California, that, maybe in Bakersfield, but, not in Los Angeles, right? No. But the average house in America is $500,000, and that's your core thing. So I think, but part of this is changing your thinking, right? So the question is, do you believe in that kind of, your dad's thinking, which is go buy a house, plug your money, stay in the house, pay your mortgage, blah, blah, blah.
Yeah.
And I'm saying that thinking is probably a little obsolete. You need to upgrade your software, right? And right now, the way you should have your savings account is put your savings account in Bitcoin, right? That's your savings account. Don't touch it. Just because, like, in the same thing, you wouldn't be selling your house just because, there's riots in the street of LA. You're not going to sell your house immediately, right? You're also not going to sell your Bitcoin. You shouldn't think about selling your Bitcoin because XYZ, thing, the price. This is your savings account. So, treat it like a savings account. So I think, that's the right way to think about this stuff. But yes, I think most people are going to do the wrong thing. Most people are going to get hosed, right? They're not going to buy Bitcoin. Bitcoin's going to go to 1 million, and then they're going to go, how come I didn't see it? And they're going to be like, I remember this show on Grizzle, with Kreuger, and he told me
4/26/2024.
They won't pull the plug. They will not pull they won't do that. Sorry, they won't pull the trigger. You know what I mean?
No.
They're not going to do it. So most people will not do it. Most people are going to get talked into their wives into buying an overpriced condo somewhere and redecorating it.
A timeshare.
An overpriced condo on a coastal region that ends up getting wiped out.
Yeah, I mean, look, it's just like you got to do. I kind of have this analogy that, look, America is a little bit the Titanic right now. This debt's kind of an iceberg. We've got the iceberg in front of us. We're about to ram into the iceberg. We might have already rammed in. It's leaking, right? And guess what? There's 21 million lifeboats. Do you want a lifeboat? Get one of the
analogy is amazing. It's such a good analogy.
Fred, that is absolutely perfect. There's 21 million.
Get a couple lifeboats. I got a whole bunch of lifeboats.
You're trying to help everyone, right? You're one of the 21.
So, but like get one of the lifeboats. I mean, that's what I would suggest to people. And you know what? Once the Titanic sinks, guess what? They'll build a new ship. There will be it's not going to be the end of America. There will be some new thing. They're going to renegotiate that. The next generation will emerge, French Revolution was really bad for the nobles, but France is a pretty good place to live right now. You know what I mean? Like if you're going to France, American Revolution wasn't so great for the Brits, right? But it's pretty good for us now. You know what I mean? So we just have to have a changing of the guard, right? We're going to have to go through this. I'm sorry, Bidenomics is not going to work, right? It's not going to work. I'm not sure Trumponomics is going to work either. But like the Fiatonomics is not going to work. We're just like we're shuffling chairs on the deck of the Titanic right now. Let's move this chair over here and this chair over here. It doesn't matter. The Titanic's sinking. Get a lifeboat. That's what I think.
Maybe just, I just really believe, just what you're just saying resonates so much with the younger generation, just in the sense that just they see the burning of the money. They see that, this is just throwing it at wars, throwing it at, just spending that just is fiscally irresponsible. It just feels like that I definitely, when I was in my 20s, did not care or think about any of this stuff because I just wanted to make money. But it just feels like that this generation, Gen Z, is far more attuned to it and far more attuned to what is real. Hard money.
Well, believe it or not, it's been a subject of discussion since the 80s, right? I mean, Pete Peterson, the founder of Blackstone, which birthed BlackRock, wrote a book about this. I can't remember the title of the book. It was sort of like, the coming debt crisis and stuff. And like, we've been talking about this for, honestly, 40 years right now, right? Unfortunately, during these 40 years, things have been getting worse, not better, right? It's not like anybody's solved any of this. We've been kicking the can down the road for 40 years. Unfortunately, now there's, we're getting kind of close to the end point where, you can't really kick it too much further down the road. I think there's still some kicking that you can do. Maybe 5 years, maybe 10. I think 10's kind of your stretch goal for kicking. But like, this is kind of where this, the Bitcoin, the invention of Bitcoin was fortuitous, because I think if Bitcoin had not been invented, I don't know. I don't really know what the plan B would have been. You know what I mean? Because I don't see us going back to a gold standard. And, again, gold, you have this problem of who's holding the gold. Where's the vaults? Like we tried that, didn't work. I mean, it failed even before 1971, because the problem with 1971 is we really weren't on a gold standard. We didn't have enough money to pay all the gold obligations, right? We didn't have enough gold. They were already issuing paper gold. And by the way, the French, you can see I use a lot of French things. Like I grew up in France and I have a place there. But the French, Charles de Gaulle, the French General de Gaulle and the president of France, he requested from Nixon that, he wanted his gold back. So he started moving some of his gold back on ships. And Nixon then was like, we're kind of like running a little low on gold here. I don't want this guy I don't want anybody else getting ideas to withdraw their gold. So we're just going to declare it like, yeah, your dollars, they're not backed by anything anymore. And the gold, we're keeping it. So that's what happened in 71. So, this thing has been a long time coming. It's not something new, but it is kind of going further and further out of control right now. And, and we've seen, the first real, step function up in terms of craziness was QE, right, in 2009. That was just, the idea that the Fed would start buying up the bonds, crazy idea, right? The Japanese had started doing it earlier, but this is sort of the end game of craziness, right? You're not going to QE for another century. We're done with this. This is the end. This is kind of like the Omen. You see the ravens and something's coming.
Well, and the backdrop, we're sprinkling in some more. That always helps accelerate things. No, when you sprinkle war, that always helps accelerate the.
Well, listen, I think, I think we've been pretty lucky right now, because actually, if you look at defense budget relative to GDP, it's actually almost at an all-time low, pretty much right now. So, I think we're at something like, Jesus, I can't remember the percentages, but it's very, very low relative to GDP. And but now it's going to get much worse, right? So we've actually had a very fortuitous thing that we didn't have a lot of wars. Normally we have, right? So in the 60s, the 70s, defense budgets were enormous, right? Because we had the Cold War going on, right? Yeah. So we just had this real period from 1990 to about 2015 or so, right? Where we've had almost no wars. But generally speaking, by the way, we've got a nuclear, standoff with both China and Russia. So we're going to have to increase our military budget, not decrease it. So war is like I got news for all the Republicans out there is our war budget is going to go up, not down. And it has nothing to do with Democrat. We can't, unfortunately, when you guys who want to attack you, unfortunately, you're going to have to defend yourself. So, you know, so you got to factor that into the equation as well, right? This is not like, could we spend less on defense? Yeah, but we could under Clinton, but we weren't really at war under Clinton. You know, that was the absolute low end of the Cold War, but we're kind of getting more back into a cold/hot war right now. I don't know. I don't like war. I wish we didn't have to pay money for war, but you know, but that's another reality. So that means money printer is going to go more broke. Yeah.
And one important question, just kind of as we wrap up, and just because it's phenomenal discussion conversation for the layman. Could you help them understand? You've really done a lot of work about understanding the price trajectory of Bitcoin and its math, right? And just that log of the price, log of the time. Could just give us the layman understanding of how you view your pricing framework of Bitcoin and how that that compares to others' view of Bitcoin. But just because I think this is powerful the way you tweet about it extensively.
Sure.
But would love to hear that.
Yeah. So realistically, if you look at Bitcoin price and you just look at it, no logs, just look at time and you have Bitcoin price. Well, you're probably likely to say the following. Well, I remember it went up. I don't know what it was. It was really, really low in 2016 or 14 or whatever. It was super low. And then it went up like crazy in 2017. And then it crashed like crazy. And then it went up like crazy in 2020. And then it crashed in the end of 2021, right? Yeah. And now it's kind of coming back. So that's kind of like a super layman's look at this thing. And you're like, well, that thing looks like a complete casino volatile. It's way too volatile for me. I don't want to have anything to do with it, right? Now you look at it, when you look at the Bitcoin price on a logarithmic basis, and you look at time just normally, right? And then you're like, well, it looks like it seems to be kind of inching up, and it seems to be kind of on this like bending parabola, right?
Yeah.
But it looks like it seems like it might be some regular way up. But it looks like it's bending down, and it's sort of hard to get your intuition. Now you look at it where the price is on a log basis, and time since the Genesis block is also on a log basis. And now you look at it and you go, oh my God, it's a line.
Right.
So that's like, when I first saw that, I was like, oh my God, this is like, there's causality here. This is not just some random curve or something. This is this line. And that line is what's known as a power law, right? Whenever you see that line on log space, you know that Bitcoin's growing at the power of time. So you actually can actually look at it, and you can do this with just with an Excel or Google Sheets, or you can do it yourself.
Oh, did Fred, hold on. I think Fred froze up there.
Do we still have him?
Fred, are you still there? Well, but that was an incredible discussion. Hold on, just see if we can bring,
if he comes back,
let's see if we can bring Fred back. He froze up, man. There was too much knowledge being shared on the stream. That's what was happening, Scott. There's talking about jamming up.
Someone didn't want him to finish. That's all I have to say. Was there someone involved in running the ISP?
Oh, that was just an incredible, and actually almost is. It's fittingly beautiful to end in that. But he explains it, right? The power, the log graph, and just what's here. I had one follow up, but I'm not sure if Brett can come back. But guys, that was an incredible. We've been going since 10 a.m.
Ooh, man, it doesn't seem like it though. When you have great guests and knowledge like this, it just seems to fly by. I hope you guys have gotten a ton out of this. We have. We're going to be rewatching this ourselves just to make sure we got every little tidbit.
Well, exactly. I think he's still frozen. It looks like it's stream.
Why don't we thank our sponsors?
We got to thank thank the sponsors.
Yeah, maybe we could throw up the sponsors while we're just waiting for Fred to come back. So we got to thank West Red Lake Gold, lead partner here. They're building the next billion-dollar gold producer. We heard from them. Also, Dolly, Varden Silver. They're one of the fastest-growing mineral exploration companies and your leverage play on silver. And then we have Amplify ETFs. They're your one-stop ETF marketplace. Next is 314 Research. We heard from them. The next generation of investment research. See how they can improve your investment process at 314research.com. And Unlimited Funds, offering hedge fund-like exposure at a fraction of the cost. And next, we have Hilltower Resource Advisors, expert insights on commodity markets. Visit their work at hilltowerresourceadvisors.com. And next, we have Goehring and Rozencwajg, natural resource investors. They put out some of the most well-researched commodity forecasts in the industry and run a commodity fund. You can find them at gorozen.com. And lastly, we have Blokland Smart Multi-Asset Fund. It's one-of-a-kind fund invested in scarce assets, high-quality stocks, gold, and Bitcoin. Check out bloklandfund.com to learn more about that. So thank you for our sponsors making this possible. It's been an amazing day, Tom. Wow.
Oh, man. I'm like, hey, listen, share this with your friends and family. Much learning to be had here. Guys,
remember, 21 million lifeboats. Are you going to be on one of them? There's only 21.
Hey, Scott, I'm taking 4. I'm going to have the cruise.
Get out of here. You don't take 4.
I'm that guy. Women and children drowning. Me and my propelled lifeboat out of this thing. That was just such incredible. It was just
what a way to end off a hard money conference.
Yeah, that was incredible. And guys, we want to thank all of our incredible guests, and it really would not be possible without our lead partners and the companies involved. Just a huge thank you. We're on literally our 3rd iteration of Grizzle Hard Money. Looks like the best event we've put on by country mile. Right now we got over 3,000 people live watching on Twitter.
Tell them how you can find us, right?
Yeah.
Because I mean, we do many conferences like this, and so where's the best place they can find out about the next one and what research we're putting out?
Wonderful, yeah. So just with respect to what we look at for Grizzle, we've been at this now for 6+ years. Grizzle is myself. So I was a portfolio manager at TD Asset Management, one of the largest asset managers in Canada. I think it is that's the largest. And I was managing the commodity funds at the time. So the resource funds, gold funds. Scott, you want to give a background on yourself?
Yeah, so I was on the sell side at Credit Suisse, publishing research there, got ranked by Institutional Investor. Then I ended up running into this guy. I ended up at TD as well, putting money to work, one of the largest asset managers in Canada. And then we went out on our own. We thought there was a way to do it better, and we've been at Grizzle since 2018.
And our third partner, not to forget, is Chris Wood, who's a legend, a living legend, we've been with us since day one, a partner at Grizzle. He publishes weekly for us for our Substack. And if you don't know our Substack, please do sign up. It's grizzleresearch.substack.com. That's where you'll find all of our work. It's Grizzle Research and Quant, and it is what it says on the tin. It's fundamental research and macro research. That's where you'll find Chris's great work. And also
our deep dives, Chris Wood puts out a free piece, and then you'll be notified of conferences like this, who's going to be there, what the takeaways are. We're going to provide a takeaway from this whole thing so you don't miss anything important. So that's probably the best place to find us. And also, obviously, on Twitter, you can follow along to what we're looking at on a daily basis.
Yeah, so we're always sharing our views on Twitter, and Substack is where we write our long form, and the macro happens there. But a real big thanks to everyone that happens, and we also just to wrap up what conferences we do. The Hard Money has now become an institution. We're on 3rd installment of Hard Money. Our Uranium one-on-one conference may be one of the largest. This Hard Money is actually the largest Hard Money conference that brings together gold, silver, Bitcoin. Our uranium conference is one of the largest as well. That's our one-on-one conference. We throw that typically once a year. And then our resource conference is the who's who of resources just across the entire landscape. We also do battery metals, a one-on-one conference there. And then we are going to have a growth and tech conference this year as well. So it's all coming down the pipe. Please do sign up. Keep your notifications on if you're on YouTube. Thank you very much.
Yeah, thank you for all the questions. Some great questions there. Some great conversation. So thank you all for tuning in and going on this journey with us today.
Thank you. That's Grizzle Hard Money right there. Get on one
Let's
of those.
call it a day. Happy Friday, everyone. We'll be back at it, but enjoy your weekend, everyone. This was a hell of a show.